Hey, welcome back, everyone, back to the Black Brain Trust. This is episode 124. I'm here with my co-facilitator, Lionel.
Hello, how you doing, everyone? How you doing? How you doing today, Mike?
I'm good, brother. Yourself?
I am well. Thanks for asking.
Okay. Before we get started, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net. And if you want to follow along, there is a docket in the description beneath the video. We will get started. All right, so this one is from quartz.com. Startup investment in Africa jumped to record levels in 2018 as later stage rounds rose. There, there was on there was an almost four-fold increase in total startup funding received for Africa startups in 2018. The numbers of funding deals more than doubled, and startups on the continent are increasingly being recipient of big ticket rounds of over $5 million in total. African startups raised a record of $725.6 million across 458 deals, the 2018 Venture Investment Report by WeTracker shows. The larger size of individual funding rounds is illustrated in the top 10 deals, which jointly accrue to $457 million and accounted for 61% of total funding received. It reflects increasing investor confidence in startup businesses across the continent's major hubs. It's a noteworthy trend given how, in recent past, the abundance of early stage funding was typically not followed up with crucial Series A, A growth stage. In total, 30 startups raised individual rounds higher than $5 million and 32 deals valued at $626.9 million. This is just a chart they're showing you from 2015 to 2018, the millions of dollars that have been raised for African startups, tech startups. There's a direct link between larger ticket rounds and quote the number of funds that have higher capital allocations and write larger ticket sizes. Says Yeli Betamosi, managing partner at Micro Traction, the early stage investment fund that was also the most active investor in 2018 per WeTracker's report. But just as crucial, he argues, is the increasing number of companies maintaining maturing to a level of growth that justifies the bigger ticket rounds. Quote, like any market is driven by supply and demand, says Batamosi. Data backups data backs up the sentiment. WeTracker's report shows 25 Africa focused funds, a mix of institutional investors, venture capital, grants, and prizes launched last year with a total capital pool of just over $1 billion. This is I don't want to read too much into it, but this is actually really good. So if you're looking at this chart right now, fintech raised the most amount of money in Africa for startup investment. So $284 million. Clean tech, clean tech is environmental, so that's $143 million. E-commerce, $97 million. Education tech, so like your school on the tablet, school on the box, that type of deal, $32 million. And then agriculture, agritech, $20 million, and healthcare is $15 million. So This is very interesting. I know. What did you think about this?
It's great. It's absolutely startups in Africa. African startups are receiving venture capitalist money to start their businesses. Of course, this doesn't say, the article does not point out which countries, and therefore I'm thinking it's across Africa and in the different countries. The more developed countries being Kenya, Rwanda, Ghana, Nigeria. Pretty sure those are, I'm going to go out on a limb and say those are the ones that Africa also. Those are the ones that are maybe receiving the bulk. But other than that, it's great that Africans are receiving venture capitalist money in order to build these businesses that is going to benefit Africa.
Hmm. Hmm. I have a Actually, let me share my screen. Paul Bryant, what's going on? Let me share my screen and should paint a better picture for you, Lino, because you said it didn't show. But here's a map of the tech hubs in Africa. Um, if that gives you a picture, that gives you a, better idea of where the tech hubs are going, or where the tech hubs are coming
Mm.
from, which ones are being funded.
Oh, Senegal. Okay. So, okay, we got
Hmm.
Senegal, Ghana, Cote d'Ivoire, Nigeria. I'm guessing the dark burgundy areas are the more high tech places where tech hubs are going. I'm on my phone. I really
Those
can't
are
see.
places that have an excess of 50 or more tech hubs.
Mm. So Nigeria
So
and South Africa.
yep, the lighter pigmentation ones um, usually have no activity, but anything that's shaded has activity. So that means it has 1 to 4, 8 to 9, 10 to 20, something like that in that range. Um, and the reason why I brought this up is because Africa is popping right now.
Oh man, dang.
It is popping.
Yes, Lagos itself has like 25 million people in the Lagos land area. So I pointed out to say that in coastline, starting with Nigeria and going west, you got Nigeria, then you got Benin and Togo, but then you have Ghana. So Benin and Togo is between Nigeria and Ghana, and I wonder if there's any spell off. Will there be any spell off in those two countries? But then you have Cote d'Ivoire, then you have Sierra Leone, Liberia, and the Guineas. Actually, yeah, the Guineas. Then you get Senegal. So I can see if there was a like a uh um I forgot the word I'm trying to I can't think of the word I'm trying to think of, but a area in Africa that could dominate,
Mhm.
I would say it's that West African coast because you have some large economies there.
Mhm.
Really just dominate that one area, the size of that area can be either comparable or even more dominant than some areas of different countries. Like China, you have Shenzhen, the Shenzhen area is where Hong Kong is like borders Hong Kong, so it's in the south, and that's receiving a lot of startups. But this area right there would, I think, would just dominate that area of China.
Yeah, and I mean the ones that are highlighted in terms of numeric value, those are the ones that are just like really rocking. But the rest of the continent is rocking too. Um,
Mm-hmm.
Tanzania, DRC, the Democratic Republic of Congo, um, uh, 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 Libya. Libya is not shaded now only because of the downfall of Gaddafi, but at one point it was actually a powerhouse.
Mm.
And then you keep in mind that Ethiopia is there, but it's not really highlighted. That's because they only have a
Yeah,
couple of
you're
tech.
right. Corridor. I mean, the corridor. That's the word I'm looking for. Corridor.
Okay.
Coastline. That West African coastline could be a corridor, and that East African coastline could be a corridor with Ethiopia, Kenya, Rwanda, Uganda. That can be a corridor.
Hmm.
Then you got South Africa with Zimbabwe. I'm surprised Zimbabwe is in there because of the amount of trash people spoke about. Uh, uh, I know they have a new president now, but I'm surprised they're in there. Then you got South Africa, and but even Lesotho is like you mentioned. Even though these areas are shaded red, other parts of Africa is cracking, and I would even throw Lesotho in as to be part of that South African corridor. So we got some corridors working. Then when the Senegal area, you got Gambia that's really engulfed by Senegal, surrounded by Senegal. That could be a spillover, but it's a lot of opportunities here.
Yeah, that's why I brought it up. I think it's important that people listening to these hangouts or watching these hangouts actually understand how far behind African Americans are. They're very
Hmm.
far behind. I would say that black people are probably 8 to 10 years behind Africans right now. You don't have anything like this in the United States at all. I I mean, we have some tech hubs, but they're not directed at melanated people. They're not,
Right.
pitched to black people. They're really, POC, if at best, right? People of color at best. So, um,
The
this is important to look
closest.
at. That
The,
this is important
uh,
to look at because the numbers that we're reading is close to $1 billion. There's money being moved around in the tech sector, startup arena in Africa right now, and black people are nowhere near this in America. Not even close. The closest thing
right.
you're going to get to a tech incubator for black people is probably this, right? The brain trust is probably the closest thing you probably would be able to walk into and actually hear these type of discussions going on and hear the type of innovation dialogue going on about the fourth industrial revolution. Um, this is you know what I'm going to do? I'm going to drop that in the chat so
All right.
everybody else can see it for themselves. But it says fastest growing economies 2016 to 2018. Democratic Republic of Congo, Zambia, Cote d'Ivoire, Togo, and Nigeria. Togo's not even
Right, and that's the
identified on the
thing,
map.
and that's why I just said I haven't even saw this, and I saw that corridor. Togo and Benin are in between
Mm-hmm.
Nigeria and Ghana. Togo doesn't have as much natural resources as its surrounding countries. Benin have more resources than Togo. They're comparative in size, but that spillover from Ghana and Nigeria, because if you travel from Ghana to Nigeria, you have to go through those two countries. And if you say, well, just like how the people are leaving Silicon Valley because it costs too much, so they're taking their you know their know-how somewhere else. So they say, well, I'm going to leave. A person may say, well, I'm going to leave Accra, or I'm going to leave Lagos, or Abuja, or any other these major cities in the East, in Ghana or Nigeria, and they go to Togo or Benin. That means that the cost of living is lower, and you can replicate the hunger. The hunger is there to survive and to to get into the tech industry, albeit these Togo and Benin are French speaking colony, or French, mainly French speaking countries, but still, it's there. That corridor is there. That West African corridor is there.
Hmm. Yeah. So top five ecosystem cities by number of active tech hubs: Lagos, Cape Town, Nairobi, Cairo, and Accra. So
What was the second one?
thirteen
Lagos and what?
percent of Accra.
Okay.
13% of the hubs are partnering with mobile operators. Um, I mentioned this last week, on the mobile OS hangout, that this is what I was talking about. Mobile applications, mobile development. All of this is happening right now. Um, we have Impact Hub in Boston. That's actually interesting. We have Impact Hub. The rest of them I don't know of. Afro Labs, I think that's probably a really cool name. But I'll drop this in the chat so that people can actually watch.
Yeah,
Uh,
yeah,
I mean,
yeah. It's cracking now. Man, yeah, man, it's cracking. People jumping in. They jumping in the pool.
right. They're moving ahead. That's what I have been trying to beat. That drum for since the beginning of this hangout. That it, these hangouts that you see on YouTube, people having these 8-hour hangouts, 4-hour hangouts, whatever the length is, um, they don't realize how much time is being wasted talking about nothing.
Yes.
You got a billion. We just read this article. $1 billion in investment in angel funding for African tech startups. If you really, you're supposed to be pro black and all this other stuff, you had better be focused on this, because these guys, and I mentioned, I'm talking about Africa, this means women included. They're pushing the envelope right now.
Hmm. And man, whew, I'm getting excited.
Yeah, and that's why I like to have these discussions, because it's to get you focused on what you don't know what's happening. That one PDF, that's just from 2018. They're talking about 2019 is going to be an explosion. We covered that on the Mobile OS Hangout. That the feature phones, the smartphones, mobile application development is going to be major in 2019.
Now, let me throw something else on the table. Another thought on the table. You mentioned, well, the article mentioned um, the DRC, Democratic Republic of Congo, that, or otherwise known as people may know it as Zaire. That big hunk of land in the middle of Africa that has gone through so much turmoil in the last hundreds of years. They have the largest deposits of cobalt and other minerals that are used to make phones. So imagine you not only owning the resources to make the product, you it could be an entire economic system. So you own the resource to make it, you own the manufacturing process to take the resources to make the end product, and you have the people there to buy it. Oh my God. Just imagine
Hmm.
that. And you have possible connections to both West. They have a port on the west side of Africa, but they have to go through other countries to get through the Indian Ocean. So you can ship it to both hemispheres. Hmm. Man, boy.
Yeah, you control the supply chain aspect of
Yes.
the necessary materials to build your devices, and manufacturing it on in your country makes it even faster turnaround from start to finish. Um, but phone hardware is one thing, but software is what drives hardware.
Mm.
So you can make all the phones you want to, but if there's no software to drive it, it's not going to be really usable. So the idea is to um, work in parallel with the development of the phone itself. So you can't just like, okay, you made a phone and it's similar to an Apple, but it doesn't really have the Apple ecosystem. So you got to create the ecosystem to go with it.
Yeah, you're right, Paul Bryan. Vertical integration. I was trying to think of that as I was explaining the process. Thank you.
Mhm.
Hmm. Yeah, and they're near both of those corridors I mentioned, the West African and uh, East African corridor. So they close to they Central Africa. So they oh man, this is yeah.
If anybody else wants to talk about it, we can talk about it in open mic again. So
Uh-huh. Uh-huh.
this one is from Newsweek.com. Congressman introduces 420 marijuana legalization bill to regulate weed like alcohol throughout the United States. Representative Earl Blumenauer, I think that's how you pronounce his name, of Oregon, introduced a bill Wednesday that would regulate marijuana the same way the government currently regulates alcohol products. The bill, H.R. 420, seeks to remove marijuana from its list of illegal narcotics under the Federal Controlled Substance Act. The bill would also create a a nationally regulated industry that would be overseen by the Bureau of Alcohol, Tobacco, and Firearms (ATF). 420 is slang among marijuana supporters that encourages smoking celebration or smoking of pot on April 20 or at 420 on the clock. Blumenauer, a Democrat from Oregon's third congressional district and a member of the House Ways and Means Committee, has worked with representatives from both parties towards legalization of marijuana and cannabis products, in addition to seeking progressive reforms on the federal level. Marijuana is currently listed as a Schedule One drug, defined as having no currently accepted medical use and a high potential for abuse. Marijuana sits alongside heroin, LSD, um, I don't even know how to pronounce that one, peyote, and ecstasy on the Drug Enforcement Agency's list. What do you think about this? I know.
It looks like that they're trying to legalize marijuana altogether. A couple points in the article, I forgot the name of the caucus, but they were saying that they were trying to prevent the federal part of the government from interfering with um, marijuana, the processing and selling of marijuana. So they are really trying to push this thing through, and I think some states need it, mainly the northern states. Well, not mainly northern states, but high tax states. I would say that need it because they are seeing a mass exodus of people leaving their states because of high taxes, going to other states. All that money is leaving. They need some type of revenue, and this can help them. Um, but yeah, they are really pushing this thing and to regulate it like alcohol, which means the ATF will. They're saying they're going to have the ATF regulated. It was another something. Yeah, but yeah, yeah.
Mhm. Yeah, I think Paul Bryant is still on injured reserve or day to day, but I don't think he's going to be on the hangout tonight. But my take on this is that it's a good thing, but I think this guy, has a vested interest. So
Hmm.
he's a lobbyist. If I would give him a title or a label, um, because when black people were smoking it was bad, but now that they want to legalize it, then it's good enough.
Right. Now, also in the article, it said that they're going to what was it? I want to read it verbatim, but they're going to the people that went to jail over it, they were going to uh, it's pardon them because of past illegal crimes or past crimes toward marijuana. That's what I read from it, but we'll see. Because if you legalize this, what do you do with the people that went to jail over it that are still in jail over it? Do you take the felonies off their record? Do you pardon them from jail? You know, they went to jail because of
That's a
this.
part of this.
Uh,
That's a part of the social equity program, right? So the social equity program was supposed to rectify a lot of those past offenses, right? So people who were you know, who are mis characterized or affected by those policies. The social equity program actually amend dissolves a lot of those past offenses. So if you were disrupted either through eviction or some form of gentrification, false arrests, and things of that nature, um, though the social equity program was actually geared and designed around helping rid um, those past offenses, and gives access to um, those affected by it to cannabis, uh, uh, um, cannabis legalization.
mm-hmm.
So
But I was
once you
go ahead.
well once you get involved, if you fit any of those characteristics of policy, then that was you were affected by the policy, then you have access to this market now. That's what's supposed to happen now. What happens in California is different. What happens in Massachusetts and New York. So maybe Complex can come on and he can talk more about that. But go ahead.
Now, I've even read articles that Complex sent through the mail, which talks about the entry point for people that the social justice, well, yeah, the entry point for the people it's supposed to help is so high. You know, the cost is starting to be so high that it's starting not to even help them now.
Hmm.
So yeah, we'll see it. Well, maybe we can come back to it. I don't know, but yeah.
Yeah, Complex is in the chat. We'll circle back to it
Okay,
when he
all
gets
right.
on. All right, this next one is from CNBC.com. Retailers are slashing iPhone prices across China as consumers say phones aren't worth the cost. Apple's latest iPhone models are facing huge discounts in China as retailers are trying to sell the struggling devices. That comes as the top of the line Apple smartphones have posted poor China sales on what experts say are too high prices for the world's largest smartphone market and a lack of innovative features compared to local competitors like Huawei. The technology giant itself acknowledged earlier this month that unexpectedly low sales in the Chinese market would likely lead to worse than anticipated first quarter revenues. One of the recent iPhone cost cuts in the country came from Suning, a large Chinese retailer, which charged which changed the price of the 128 gigabyte version of the iPhone XR from 6,999 yuan to 5,799 yuan, a 1,200 yuan discount. Other third party sellers on the site had the devices for even cheaper, offering flash sales to try to unload iPhones. One seller had a 256 gigabyte version of the iPhone XS Max, Apple's most premium device, for 9,699 yuan, way below the U.S. firm's official selling price of 10,999 yuan, 1,600 U.S. dollars for that smartphone. Still, the still that remains more expensive than in the U.S., where the same phone would sell for $1,200 $1,249, according to the Apple website. And that's just on one site. Other retailers in China are also putting their iPhones on sale. Sony and Apple reseller was advertising 700 yuan off of both the 128 gigabyte and 256 gigabyte version of the iPhone XR. E-commerce site um, Pinduoduo, which allows third-party sellers to sell products, also had hefty discounts across all of the latest iPhone models. Apple Apple's issue in China are down to two major factors. Experts and local consumers say it's got its pricing wrong, and it has failed to introduce features to excite consumers in a forward-thinking technology market. Now, analysts said competitors have taken market share in the premium smartphone space. In a public related in a public letter released on January 2nd, Apple CEO Tim Cook blamed the slowing of Chinese economy and rising trade tensions with the U.S. as one of the key reasons for lowering first quarter sales guidance. Experts, however, told CNBC that much of the iPhone's China problem comes down to the company setting the wrong prices. For example, Apple's 512 gigabyte iPhone XS Max, the most expensive of the new models, costs $1,499 in the US, but in Asia's largest economy, the undiscounted price is 12,799 yuan, or nearly $1,900 US, a more than 26% premium. Other variations of the latest iPhone models have similar price premium in China. So we've talked about this before, right? Who wants to pay that much money for a phone? I mean, you even have guys like Dollar Will who are still holding on to their I think version 6 or version 7 iPhone with a cracked screen and battery can barely charge. People just don't feel the necessity to upgrade their iPhones every time the new version comes out, and they're not going to pay $2,000 to do it. It's not going to happen.
Yeah, I even stated those same claims. Only reason I upgraded was because I hit the 6 and I upgraded to an 8, and my 6 started to just go haywire. It wouldn't hold a charge. I would sit there and watch the battery and save and just deplete, and it was crazy. So I upgraded,
Mm-hmm.
and but also said whenever I upgrade to a new phone, I don't think it's going to be Apple because the Apple doesn't offer the type of apps and new features that these other phones offer. It's like they nickel and dime. I'm tired of them nickel and dime me on these apps. Then every couple months I got to buy a new charger because the charger didn't frayed and will stop working. And then when we did talk about um, the price of hold on,
Yeah. I'll pick up where you left off, but
yeah,
go ahead.
yeah, that nobody will pay for that, pay for all of that because it costs. That's a down payment on something. You paying. That's just a lot of money, and I don't think Apple's going to come down on them on those prices no time soon.
Mm-hmm. And the reason is because Apple consumers are always willing to spend money that Apple charges. So if Apple says it's $2,000, then they go out there and they sleep in the sleeping bag overnight, waiting outside of the Apple store in the freezing cold, for the next device to give their money to somebody, for allegedly this Apple experience, which I don't understand the phenomenon for personally. Um, I replaced a PC in my house with an Apple iMac, and that thing sat there and collect dust. People did not want to use it. So, but yeah, they don't have 5G. Um, they don't have foldable phones. There's nothing really super impressive about the iPhone over Android phones at half the cost. Samsung has a great camera on their phones. Their Note 9, nice and big with a stylus to it. Um, Huawei's phones are great. I had an old Mate 9 Pro. I still have it. It's still great. Just doesn't have any software updates to it. The Google Pixel phones, awesome phones. Um, I have a OnePlus 6T, fantastic. I never had any problems with it. Fast charging. I get 50% charge in 10 minutes. Um, yeah, I just don't see the value. I mean, people just don't see the value in iPhones anymore. It's just one of those things where Apple's magic has worn off.
Yeah, and also the article Huawei and I think they pointed out another manufacturer is going to start.
Xiaomi.
Yeah, yeah, is going to start putting 5G on their phones, and Apple may not have 5G on their phones to at least in the 2020 next year. So that can drive. That's going to drive the Chinese uh, market in terms of what phone. If you're not going to have 5G and it's available, then I don't want your phone.
Oh, what's the point, right? I mean, the whole point of 5G is to get faster connectivity. If I can't get faster connectivity with a new iPhone, what's the point? Plus, you can get, um, like I said before, most people who have their iPhones, they tend to have a cracked screen and the battery doesn't hold a charge. Useless. And the chargers, cost 30, 35 bucks. That's expensive. I can't see the value in that. So
Yeah, with me, I always keep a backup because it frays. It after a while, the connection part, it frays. The casing starts to peel, and it's not like I'm rough on it. It's just frays. And then also in the article, a person they interviewed had the same sentiments as me. I'm just using it for internet, phone, few other things. But you charge me $1,000+ for it. Come on, man.
hmm and the thing is, most people who buy Apple phones don't even own Apple stock.
That's a good point.
All right, let me jump to the next article. All right, this one is from Yahoo.com. Yahoo Finance. Amazon eyeing closed Sears for Whole Foods expansion. Yahoo's Finance. Zach Guzman, Crystal Wu, and Janine An discuss Amazon's Whole Foods expansion plans with Kevin Kelly, Benchmark Investment CEO and managing partner. So we discussed this back in November, that possibility of Amazon, Jeff Bezos going after a failed carcass of Sears. We were the first ones to really talk about this and really call this out almost 90 days ago, if not longer. Um, the possibility that Sears would be gobbled up by a super whale um, was on the deck. Now, there was other articles that discussed It might have been Target that they're going after for good reason because Target has um, great retail marketing, but Amazon does not. So that's why they would go after Target. But in this case, Sears, as a brick and mortar infrastructure wise, makes a lot of sense. And now here you have Yahoo talking about what we had already been discussing almost 3 months ago. What do you think about this line now?
And you called it, man. You called it. It like I saw the video. They were discussing it. They were. They said it just makes sense. Sears been around since Sears brick and mortar stores has been around for decades, for a very long time, and for them for that very long time, they had to build brick and mortar stores in a number of places because at the time, you didn't have internet, and there was what was is this ability to shop online is a very new phenomenon. So you had to go to the store, and Sears was one of the biggest places you went. That we like we discussed earlier, and or in previous shows. Sears, you can go to Sears and get everything you needed, including new tires and get your oil changed while they put the tires on. So these brick and mortar Sears were in a lot of places. Sears went out of business. They was able to change with the times, or whatever the case may be. So now you got this plethora of brick and mortar stores across the country. The video, I forgot the lady's name. Amazon and Whole Foods tried this Whole Foods 360 store. They were gonna go after the millennials that wanted certain things, but since Whole Foods got connected to the Amazon supply chain, the food started to become cheaper, which means that they were able to build out. And like you said, like everybody is saying, it just makes sense. Hey, go after these defunct Sears brick and mortar stores. They the guy was saying that a few of these Sears stores were remade to be Radisson hotels. So they have the space. They're big. It's not like they're small. So they're big stores where you can put a grocery store and whatever else Amazon chooses to put in there. This that man, this is gonna cause a lot of competition for a lot of people.
They're gonna put well, this is more focused on Whole Foods, but for the most part, they're gonna expand it. Whole Foods doesn't need to be that big,
Mm-hmm.
but when you really put it in, you, I know you're gonna have to mute yourself. There's a lot of feedback.
All right.
When you really put it into context, um, they want to be this metropolis, so to speak. This could actually reinvent malls because Whole Foods is not inside malls. It's really inside like a plaza, but not inside of a stadium style mall. This could actually reinvent malls. This is where Bezos or Amazon can actually put their money into something larger and create something better. Um, Same thing with if you look back in history at or recent history of Sears. When you went into Sears, there were little micro boutiques inside there. You had J.C. Penney, you had Craftsman, you had um, what else did you have in there? Levi's. You had all these little boutiques built within the store itself. So Sears itself just became more of a bigger holding of little micro brands within the store, which is exactly what Amazon does on their website, where you go look for whatever product it is, and then you have all these little micro stores within Amazon itself. What's
You're
going on,
right.
Complex?
You are. What's going on,
Hey, what's
Complex?
going on, you
You are.
guys? It might be a
You are.
little loud, man.
You are. You
I'm
you are totally right because Sears, JCPenney, Macy's, all these stores were anchor stores to these malls. Because they were anchor stores, anchor stores. All these little other stores built their were built around them. So now that um, a lot of these Sears stores were multi-level. They were not just real, one level. They were at the end of the mall, end of the hall, end of the corridor, and they were mall. You can get in and out. It was there, right by the parking lot. So now you have a grocery store there, which means you're going to bring people to the mall. And what are you going to put on the second floor? Or some of these Sears stores had and these malls had third floors. What are you going to put there? And like you said, Sears had these little boutiques. Amazon do the same thing.
Hey, can you guys hear me?
Yeah,
Yeah, we can.
Oh, okay. Hey, I'm picking up a pizza. It might be a little loud. Man, we called it, didn't we? We
Yeah,
called it with this
yeah.
Amazon Sears bit. We called it.
Hmm.
Yep. Yeah. I mean, we're just to echo what Lionel said. I mean, why why deviate away from becoming like the largest sort of the truly largest retailer? You boutique it. You acquire Sears. You utilize the space that's there. You do all the things that you guys just discussed. I mean, that was a brilliant move, man.
Yeah, and we're the only platform in the manosphere on YouTube that was actually discussing this. So I don't recall anybody discussing it.
No one.
And we called it for exactly what it was, that the brick and mortar infrastructure, the existing infrastructure, takes away 80% of your need to get building permits and need to go get, find the right location. All of those Sears are in the right locations. All of them have the parking lot space. They all have, the power utility to it. I mean, there's not really much more I can add to it other than that we got it right and the other guys got it wrong.
yeah, and a lot of these Sears are in outside malls also. So outside strip malls. So this is going to
Plazas,
bring business back, huh? Say again.
not just at plazas.
Yeah, plazas. You're right, plazas. This is going to bring business back to malls, to plazas. This is going to bring business back to quote unquote middle America. So you can imagine all these politicians saying, "Oh yeah, we brought money back to middle America." This is just going to bring business back because now you go to the mall, get your groceries, get whatever else Amazon's going to sell in them stores, and these other little malls or in other little stores, it's the malls. Go to movies. Uh, Man, it's yeah.
Hmm.
Amazon is becoming Sears with the grocery store.
In a very strange way, you're right. Yep.
Right, and it's a strange twist. They're becoming Sears with a grocery store.
Hmm. All right, we'll move on to the next article. But I'm surprised Dollar Will's not on right now.
Yeah. Shout out to Dollar Will
His,
because you know what? He spoke heavily about it too, man. He made that call also, man.
yep. All right, this one is from CCN.com. What Jeff Bezos' divorce means for Amazon investors. As CCN has reported, Jeff and Mackenzie Bezos are officially divorcing. Whether or not the divorce is the result of a month-long affair with Lauren Sanchez has not been confirmed, but what we do know is that unless they change their minds, Amazon shareholders have cause for concern. According to Business Insider, the assets will most likely be structured in a way that prevents immediate dumping from Mackenzie. Washington State, where they will likely file their divorce, doesn't strictly require that Mackenzie will get half of Jeff's assets. Nevertheless, any reasonably good divorce attorney can ensure that she gets enough to matter. Legal experts told Business Insider that the structure of the divorce would most likely not force the liquidation of Amazon shares. Mackenzie shares could go one of three ways. In one scenario, she's free to do as she pleases with them. Importantly, if she were to act irresponsibly, other investors could sue her. In another scenario, she gets millions of shares but has a specific schedule on which she can sell them. In yet another scenario, she gets half of Bezos' shares, but Jeff retains voting rights associated with such shares. Speaking of voting rights, Amazon is structured the old-fashioned way: one share, one vote. While Jeff Bezos has the largest single holding at present, cutting his shares in half puts him and McKinsey just a little ahead of other major holders. Two of the largest holders of Amazon stock are BlackRock and Vanguard. So far, they have held their breath and made no public statements on Jeff Bezos' divorce. So this is interesting.
I know,
Um,
right?
uh,
It was just as soon as we were talking about how good of
This
a
is
move this was for
interesting.
Amazon to acquire Sears. This is like a bad. This is not good to investors at the same time.
What's happening, everybody?
What's going on, Dollar?
hey,
How
what's
you
going on,
doing?
Dollar
Yo,
Will?
Yeah, I just wanted to chime in when you hear the names Vanguard and BlackRock. Vanguard, I believe, is the largest mutual fund provider
It is.
in the country, and
It is.
BlackRock is probably the largest. I guess you could call
Venture
them like a
capitalist.
money management firm. They help manage investments for corporations and stuff. So
Yep.
that's the biggest whales in the ocean, and I didn't know that they had that kind of stake in Amazon. But wow,
Mm. Um, did you want to say something about this, Mike?
No, I was gonna let Complex go ahead and say what he needs
Oh,
to
go
say.
ahead.
oh no,
Complex.
you guys, it's still a little noisy over here. When I get back to the pad, I'll chime in.
no, we hear you. We hear you fine.
Oh, hold on, I'm about to order pizza.
All
Anchovies.
right. Well, while he orders his pizza,
Yuck.
she's about to get paid. Period. Because he had an affair. I don't want to make this so far, but he had an affair. But she's about to get paid. Just to speak on that divorce front. But the three options that the article stated, and keep in mind, people that are listening, those may not be the three options, but they just put out three options, which she gets stock and then just spends it, but the rest of the stockholders can sue her. She gets stock and just holds it, and then she gets stock in. But Jeff Bezos keeps voting rights. Then one stock, one vote. If she chooses to exercise her vote, just imagine, just imagine what can happen. Now,
Okay, worse
I
still,
believe,
Lionel. What if she?
yeah.
What if she dates someone on the other side? Say
Oh,
BlackRock
okay.
or Vanguard. Now all of a sudden
Walmart.
Bezos loses. He loses control.
Oh, like a coup.
Yeah.
Oh my God. Now, Amazon is
Monkey
in a prime
branch. Monkey
position with the.
branch.
I know, right? Yes, yes, yes. Monkey branch indeed. Amazon is in a prime position to be even part of a whale in the retail industry with the acquisition of these brick and mortar Sears stores, and they won't stop there because with those acquisitions and the strategic placement of Whole Food stores, they have a lot more say in terms of what they'll sell and people for. So there, I believe that Jay-Z is going to come to some type of um, agreement in terms of, hey, we both want this to go as high as possible. I believe they're going to come to a consensus in that regard. But yeah, that one. Am I still on?
I hear you now. You were Borgin. I didn't know if I thought it was just me.
Okay, okay. Yeah. Yeah, that one share one vote thing that holds weight.
Yeah.
Dollar, did you have anything you wanted to add? Dollar, did you have anything you wanted to add about the Amazon Sears deal?
I think you guys covered it well. Only thing just to point out, the continuing thing, big money. They have to spend that money. They have to spend that money. And with the kind of money that you're talking about with BlackRock and Vanguard involved and Amazon, they can ride out just about any kind of economic downturn and going into an industry with let's see. You said they're buying now. You said they bought Sears, but we don't. What are they going to do with it? So they bought. I mean, when you buy something
They
like
haven't they
Sears,
haven't bought Sears. They haven't bought Sears. They're on the agenda, so to speak. Meaning that they were the dark horse or the
they're in contention.
right. They're in contention. So
Well, given who we talking about, who can outbid them?
I don't think
That's
anybody
exactly
wants to
that's
help it.
exactly what we were saying though. We were like, look, they're gonna let this thing, they're gonna let it basically go onto the auction block, snatch it up for pennies. They got the cash to do it.
Yeah. So I mean, if they want it, what's to stop them from getting it? Uh, so yeah, I hear you. Thank you for the clarification. They do not own it. But I'm just looking at it in terms of if they come to own it, it'll be interesting to see what they do with the uh, ownership of the name and the properties and what they do with it. That'll be very interesting. But that's I just the only thing I wanted to point people's attention to is look for more things when big company for especially a big company like Apple, they have to do something. You can't. I mean, when you're sitting on that much money, Apple was the largest market cap company in America, but it's not now. I forgot earlier this week I heard about another company that passed Apple because of the decline in the stock price. So they're no longer number one. But if they don't do something, then their share value is just gonna go to the dirt. Well, not to the dirt. They're always going to be a big deal. But that's not good management, in my view. To do nothing. So Amazon is showing what you do. You get busy. You buy something. Buy something to diversify those
So,
assets.
You were going to
did
say
you hear me,
something, Lionel?
Dollar?
Oh yeah, yeah. No, I'm sorry. What was that? You listen?
I said, did you? I said Apple should buy Tesla.
That would work.
Yeah, they should buy Tesla.
They won't do it. They won't do it.
They should, but
Why?
you're right,
Why?
they
Why
won't.
not? Why do you think they won't, Mike?
Eh, Apple doesn't typically buy companies. They usually invent. So the problem with Apple right now is they can't invent anything because they don't have the visionary and who originally would have driven that charge. So buying companies is not something that Apple typically does. Um, in order to get
Yeah,
tech,
but
they just don't do things like that.
Well, I
yeah,
hear.
but you got Tim Cook with Tim Cook. He's not an innovator. He's not an innovator, man. They need to use the cash for something because if with him at the helm, what like I said, I think we talked about this. The watch was the only thing that has come out given the time that he's been CEO. That's it. They haven't come out with a single new product outside of that. It's just been revamps of older products.
Yeah.
So being a flush with cash, dropping in stock price dropping, you're seeing very little innovation on devices that are increasing in price. In order to stay where you're at in terms of your market cap and market share, I'm kind of following what Dollar Will saying with regards to Apple anyway. You got to make a purchase.
Yeah, there's a playbook when you are a young company, you innovate. Okay, you make a new mousetrap, a better mousetrap. Okay, when you become super rich and flush with cash, the playbook changes. Your strategy for growth at that point is you buy stuff, and Apple can't. They're a big lion now, and they can't play the game like they're a pussycat. They have to buy stuff.
Yeah, you will be right
So
in your
the
assessment.
culture, the culture change. All I'm saying is the culture changes when you get money like Apple has. That's all I'm saying.
What's the last acquisition that they've made?
No, I'm
Or
not
major acquisition
disputing.
that
I'm not disputing what your representation of what their character has been to date.
Mhm.
I'm saying they've never been this rich. And so it's you're still talking about a relatively young company. So they've never been king of the mountain. Microsoft has been king of the mountain. They've fallen, and then they've rebounded. So when you can look at the life cycle of Microsoft and how they've how they've developed once they had money. I mean, when it's just easier, quicker to buy stuff than to only grow through innovation. And Apple has to enter that next phase where they buy their way into stuff. Especially they need to not just be in the electronics or I mean they're not really making much off their operating system, are they? I mean, that's not a you buy a computer, you get an operating system. I mean, so they're a gadget company.
Google learned that early on. Google learned that early
What do you
on
mean?
to buy stuff, acquisitions.
Well, Alphabet has always been involved in acquisitions. That's always been there. That's always been the purpose of Alphabet. But Google itself has always been an inventor.
True.
But Apple in this regard, I think they try to diversify their portfolio by getting Beats music, right? Getting the music package and getting all the content that gets put onto these, the iPhone and the iPod and things of that nature. I think they try to go in that direction by colonizing the music market to themselves, and I don't know how well that's working out for them. If it's pulling in enough revenue to to be considered a product of their portfolio that's worth complex. You got a lot of background
Okay.
noise. I don't know if that's enough for them to actually survive off of. It fits right. It fits right in with their portfolio, but it doesn't. It's not. It's not an invention that's going to blow everybody away. The last thing they probably came up with that was revolutionary was face unlock and wireless earbuds or AirPods, and that's not. I think where they're going though, technology wise, is a Apple Watch that could actually make phone calls, that could actually where you don't need an iPhone anymore. I think that's where they're going.
Wait. So
Yeah.
they're gonna phase out the iPhone, possibly?
Yeah, I think at some point the iPhone will be phased out. You won't really need it because the new smartwatch, the Apple Watch, actually has 4G. So if they're waiting for 5G to come around, they're probably waiting to get their watch 5G ready too. That would make sense from a hardware standpoint as to why they won't adopt 5G yet, because their watches aren't ready yet. But if they can connect their AirPods to the Apple Watch and have some use Siri to dial numbers and send back text and reply to text and things of that nature, that's a game changer.
Yeah, but as long as those sales are there for the phone isn't going anywhere. Even if it's technologically unnecessary, they're not going to end it for that reason. They'll continue to sell phones as long as lots of people are willing to buy it, especially if people are willing to pay $1,000 for it.
Yeah, but that's not an innovation. Is what the article was referring to. That's not innovative anymore. People aren't buying it. So if they're slashing the prices on their phones, they're not making the same money that they was before. So there's no real reason that the phone is dead for the most part. Huawei, Samsung have foldable phones that you can fold up and put in your pocket like it's a piece of cloth. Apple doesn't have anything remotely close to that. So the phone, the whole entire idea of an iPhone, that's that's null and void now. You're gonna have to move on to something better. So and watch that can actually do all of these things that I was saying earlier, it would be revolutionary to everything else that's on the market. The closest thing that anybody has to that on the market for a watch perspective would be Samsung's Gear Watch or Huawei's Android watch. But even that is not even in the United States.
Yeah, I think that this is where management, good management, really starts to show their value to a company, because you have a you got the federal government that's shut down. You got the economy. I'm not going to say the economy. The stock market, in my opinion, the stock market is foretelling a slowing down of the economy. Okay, so you got the government on shutdown, people not having money. So you got the real estate market, home sales are kind of slowing. So people are kind of starting to get a little uneasy. They don't feel as rich as they did. So when you're Apple and people are not buying your phones, you kind of have to, be cautious in concluding they don't like the product. And if there's a macroeconomic reasons, and it very well could be, you could be jumping to a conclusion to say, it's they don't like the merchandise. So it's going to be interesting to see how they navigate these next couple of years as more, and I believe more bad news is going to come in the economy. So you don't want to blow the whole company up for something, like just because you have some bad times in the macro economy for say 2 or 3 years. You don't want to blow everything up for that.
I have a question.
Right. I always thought that.
Go ahead, Mike.
I always thought that. Okay. I always thought that Apple was going to move in the TV direction. That little Apple TV set top box is not something that people are really, jumping out of the window for. I don't think that's what anybody really wants, especially when you have something like, Google Chrome, Chromecast, and your Android phone. Or your
Well,
Android
that's
watch
because
when you
I think that's just purely because of Apple's position on piracy and not allowing you to and when it first came out, at least you couldn't upgrade, you couldn't download anything onto it that didn't come from the App Store. And whereas the Android box and the Amazon Fire Stick, there are ways around that. So I think that was it. I mean, the Apple blew it. They but I think that because of the special I guess you could say privileges they got from the recording industry when they launched the iTunes store, Apple didn't want to be aggressive at coming out with a product that would threaten intellectual property, and other companies didn't have that reservation. So that's what allowed, in my opinion, what made the Apple TV not work. But yeah, I agree with you. I thought Apple was going to start making televisions, and the idea was, to me, a good one in the sense of it got them out of music and selling movies and music, and it would have been something of a greater penetration into the living room. The Apple TV, the failure with the Apple TV opened the door for, what is that, the Google what's that, what's the
Fire Stick and Netflix.
No, what's the device that sits on your coffee table? You talk to the thing.
Oh, Google Home and Amazon.
It's not. Yeah, it's Google Home, but what's Alexa? Yeah. That Apple's failure allowed that Alexa product to come to the marketplace. It should never have made it. They gave up their advantage. Apple gave up their advantage, or any advantage that came from being first. Apple just blew it. Ulysses, we can hear you as long as you open and close your mic whenever you're not talking. Oh, he's gone now. Okay.
I think Mino had a question.
No, I was going to ask. I was going to say I agree with you all by saying Apple should purchase something, but what would Apple purchase?
He said Tesla.
Well, that's what
Yeah,
you listen to it saying Tesla.
yeah,
Yeah, they
yeah.
gotta do something. I don't know.
But other than Tesla, that's that we can guess. Well, who else? What other company will startup could Apple purchase?
I tell you what, I'm gonna keep that question in mind when you guys do the program. What is the Internet of Things? What day is that, Mike?
Tomorrow night.
Okay, because when you were talking, when we were talking about Apple, I was thinking something like that. Get into something. Just open up the landscape of what they offer, and not just be a gadget company. Something more utilitarian, have a greater, a broader presence. So it could be something in that area. But I'm going to listen to that show tomorrow with that question in mind, Lionel.
All right. Hey, did you read the email I sent out today about the IoT Explain?
Not as thoroughly as I need to. Hello?
Yeah, we can hear you.
Yeah. We can.
Yeah, no, not thorough enough.
All right.
All right, let's jump to the next article. All right, this one is from CCN.com. U.S. close to trade deal with China, possible impact on stock market. According to several reports, the U.S. and China are making progress on establishing a trade deal between the two major economies, and analysts suggest that a potential trade agreement could have an immense impact on the stock market. Following up on China's suspension of tariffs on U.S. car exports, the U.S. government has increased the accessibility to China's markets, while the Chinese authorities have eased policies on imports of U.S. products. Excuse me. Since January 3rd, the Dow Jones Industrial Average has recovered from 22,685 points to 23,925 points by more than 5.4%. The Nasdaq Composite, which represents some of the largest technology stocks in the U.S. market, including Amazon and Apple, rebounded from 6,462 points to 960 points by 7.7%. Many analysts have said over the past week that both countries are in agreement on the necessity of a trade deal and are desperate to establish a comprehensive trade deal to minimize the damage on the economy and stock market of the U.S. and China. What do you guys think about this, Dollar Will?
You know my opinion on that. I'm a technical purist. I just think it's coincidence. I think these are two separate issues. I don't think the stock market is responding to the trade deal. The stock market is falling for technical reasons, and it doesn't fall in a straight line. We have a good ways to go in this downturn. So I would expect it to resume its downtrend pretty soon. If not this, more than likely this coming week.
I read the article. That's a good question. I'm about to pass right now. You know what? No. It's good in terms of the American jobs that people can get their goods out. A couple of weeks ago we talked about the Northeast hide company. They couldn't get their hides to China. It's good for their sake. It's good for companies the farmers sending soybeans over, and so forth. It's good for jobs. We'll see how long it lasts because America's still in the South China Sea, starting trouble. So that's my 2 cents.
Sorry, that's all I got on that.
Yeah.
you know,
I thought it would be more, but wow, okay.
you know, the
All right.
president has to continue doing business. You know, we can't. The stock market's not sitting there going
Right.
up and down based on regular business.
All right. Next article is from newsbtc.com. Coinbase is pivoting away from Wall Street crypto push. Institutional this, institutional that. The narrative that Wall Streeters are going to pick Bitcoin off of its feet has become a rallying cry for many of crypto's most fervent optimists. However, a damning report claims that the unrelenting push for institutional participation from Coinbase has begun to relent, albeit only slightly. Coinbase in October of 2018, News BTC reported that Coinbase, the San Francisco headquartered crypto innovator, saw its fifth hired employee, Adam White, leave for ICE-backed bot. Although the news was initially seen as a hit to the upstart's institutional arm, as White was primarily behind Coinbase's Wall Street push, a talented individual was slated to fill the gap. It was claimed that Jonathan Kellner, the former chief executive at brokerage giant Instinet, was ready to pilot Coinbase institutional proverbial ship. But a report from up-and-coming crypto outlet, the Block, claims that the company will be retracting its offer to counter. On Wednesday, the outlet's Frank Shapiro released an exclusive report regarding Coinbase's power struggle between crypto OG and Wall Street guard. Interesting. Yeah, I think this is bound. This is my opinion on it. I think this is bound to happen. A lot of people, I should say, who who came from Wall Street, came from the legacy finance industry, really are not liking to fintech. So you get a lot of headbutting between, Bitcoin's a Ponzi scheme, cryptos are a Ponzi scheme. This is the way to really do it. It's not really an asset. There's just a lot of traditional ideas. Sort of like your baby boomers versus your Gen Xers. That sort of debate always seems to cause a conflict of interest in some areas. So I'm not surprised to see that. I'm not surprised to see what Coinbase is doing. Lionel, you have anything?
You know what? I agree with that. A lot of these crypto firms were trying to get these traditional finance people on their push crypto, but like you said, they may have came in and said, "Hey, this is the way you do it," and these crypto firms are like, "No, this is not the way we want it." And it created bad vibes, and now you see this is coming up. Crypto is something new. It's never been here before. They're rules to a new technology. I understand that regulations. I agree that regulations is needed. I agree that you have to have some type of accountability, but at the same time, you really can't put a square peg into a round circle. You have to change some things.
Yeah, I don't know. I just, Wall Street is kind of like fair weather. I mean, anything related to cryptocurrency right now is kind of like a stinking fish. They'll be back. They'll make it work. Everybody's waiting for this bottom, what seems like a bottom. And one thing you can count on, and that's greed. Greed is not going away, and everybody should know. Big money definitely seems to know that we have not heard the last of cryptocurrencies. Okay, so they'll be back. We'll just have to watch this story.
All right, this next article is from CryptoBriefing.com. Google and Facebook third-party blockchain tokenization imminent. 10 Nasdaq listed companies will soon be listed by DX.exchange. Facebook has not yet divided or dived into crypto officially, but you might soon be able to own Facebook stock as security token. The DX Exchange, a new marketplace for digital currencies, has announced trading for tokenized securities, allowing trades of Google, Facebook, and Amazon shares as easily as any ERC20 token. The Estonia-based exchange, powered by Nasdaq's market matching software, will go live on January 7th. I think today's the 11th. The initial virtual stock offering will comprise of 10 Nasdaq-listed companies, with plans to expand to companies listed on the New York, Tokyo, Hong Kong exchanges. In the press release, DX Exchange hailed the quote, paradigm shift of digitizing the stock market for the greatest public companies. The new exchange will allow millions of cryptocurrency users, as well as hundreds of millions of potential investors, to trade real stocks 24/7 in a secure and compliant trading environment, the company said. Token holders will also be invited, and token holders will also be entitled to the same dividends they would receive from a normal share. Unlike traditional stock markets, DX Exchange does not close at 5 p.m., allowing the potential for truly liquid cross-border trading 24/7. Moreover, traders can buy fractions of a share, and international traders can invest in U.S. companies that would otherwise be difficult to buy. The exchange is licensed by Estonia's Financial Intelligence Unit, giving it authorization to operate in the European Union. This is interesting. I think we covered this before, but this is probably just an updated article. Any company that's tech-wise can actually, basically offer shares to their company without actually going public. That's what it sounds like to me. I know you have anything on this?
Yeah, we did cover something like this before, but either way, it's still interesting. The fact that I'm assuming I'm trying. I'll start from the last end of the article. It was saying that, hey, once you buy these tokenized stocks, then another company will buy the actual stock, and you will get and that representation, if you buying the stock, will be sent to you via a smart contract. So that's how it will go. So it's like you'll own the stock via a smart contract on the Ethereum blockchain. So it's like you're not actually owning it, but then again, at the same time, there's been numerous reports saying how in the traditional financial world, more stocks were sold than were available. Take that as what it is, grain of salt, however you may choose. Now, I think that this will allow much more liquidity into the traditional stock market, because not only did it say the U.S. stock market, but it also said the Hong Kong stock market. I think the Nikkei stock market, which is like the second or third largest stock market in the world, which is the Japanese stock market. So the biggest companies of those stock markets will be tradable on DX.exchange 24/7, not when it's 5 o'clock in whatever country. Then of course, you'll still be able to receive the dividends, which I love. And it said something that, and I know Dr. Wills mentioned this quite a few times, how when a country's money decreases in value, then they're looking to ways to invest it in the American dollar. This provides a way for them to invest their money into American countries through this exchange. So that to me is a big aspect of it, amongst other things. And I do agree with Paul Bryant that it does raise a lot of problems, but at the same time, I believe that this right here is as a game changer.
Uh, it's it just reads like marketing to me. Good marketing, you know, a lot of smoke, you know. Okay, you got cryptos, and you got anything, you know, with the crypto jargon like tokenization,
Mm-hmm.
you know. And so you got this large millennial group that are captivated by
I'm doing it.
all things cryptocurrency and Bitcoin. And it's be smart for to have. Now you combine that with Facebook and Google. These are brands that millennials already know. So you got this exchange which presents itself as offering you something. Really, they offering you something that's really okay. It's round the clock trading, but people are not even going online right on the market right now and buying trading Facebook and Google. You know, the millennials are trading cryptos. So it's a way. It sounds like a good marketing plan to getting millennials to trade Facebook and Google and other hip stocks that they really could just go on the stock market and trade right now. You know, but
Now,
the thing that does sound like a benefit is the fractionalized method. You know, so
mhm.
you don't have to have the money to buy like one whole share of Apple and Google. That's pretty high price stock. So, you know, the fractional nature of it will be attracted to more people because of the pricing psychology thing. People see a high price stock, and they may only they would rather, in the minds of people, they'd rather have, you know, a dozen of something as opposed to one share of something, even if a dozen even if the dollar amount for that dozen equals the same dollar amount as one share. It's just, you know, pricing psychology. So the fractionalized nature of it, and the fact that it's tokenized, I think all these things will attract the younger buyers
Now,
to trade those things.
I agree with you on the many things you said. Yes, it will attract a younger generation, such as millennials, because we are more known to be to invest in crypto, and this is just an extension of crypto. I agree with you when you say that it is a marketing, good marketing, and my thing is, as I mentioned on the last time we went over this, was I am hesitant into investing into this stocks. Well, yeah, stocks this way is because you don't own the actual stock, you own the representation. So I'm hesitant in doing it myself. When the when these exchanges, these U.S. exchanges and these major exchanges around the world say, yeah, this is a good idea, and this to me is going to be in the future, you know, maybe a year or two from now. Say, yeah, this is a good idea. We all in. We can tokenize our shares and have more liquidity come in. When they get on board and work out a way to okay it, then for me, I'm all for it. But for right now, it's kind of ironic. I'm going to say this. This is too risky. So that's my 2 cents.
Right. See, I mean, when I'm a trader, it would only interest me, and I would just be buying, as we say, the price action.
Right.
But if I was carrying, but honestly, I would have no interest in it either. I would rather invest on a traditional exchange, you know, with, you know, traditional broker. I trust the system. You know, the major risk to my money is my own bad decisions about, you know, what I purchased and when I purchased it.
Mm-hmm.
It's hard enough for me to manage that. Then, you know, I would not want to have my money exposed to a new company, some newfangled way. Why? I don't understand. For me, why? And for any young person who thought this was hip, I would have to ask them why. They probably would have a good reason,
Yeah.
but we would have to talk about it. I want to know why.
Now, with all this said, I still think the concept is a great idea. It's
Right.
just
It's gonna
it's
work.
too
I think
new.
it's gonna work.
Yeah, yeah, it's gonna work, but it's just too new.
Right.
And I sound like a baby boomer, but it's a good idea. But now, it's just coming on, and
Okay. So tell me
yeah.
about this. Tell me about. So this would be a new token created.
No, what it is, it's a token, which means it doesn't have its own blockchain. It'll be using smart contracts on the Ethereum blockchain. So let's say major, okay, let's say a company rises up, and you have the New York Stock Exchange, uh, all these other stock exchanges around major world say, okay, we are going to let this, well, not let this, we are going to invest in this, and this one country, no, I mean, one business will hold shares of the major businesses that are in our country. And this business has a blockchain. So you can then trade whatever crypto and buy coins through that company's blockchain via that company's token. Or at this point in time in the future, they'll more than likely do some type of atomic swap where
Okay,
you,
so slow it down. Let me see. I'm
okay.
trying to catch up. So you saying any company that wanted to participate on that exchange, say Google and Facebook, they would issue the token.
Yeah, they're stock.
Google being the they. Google
Okay,
would
yeah,
have a token, and Facebook would have its token, and I would
their
purchase that token and trade it.
their shares will be represented as tokens. So one token, one
Correct.
share.
Gotcha. Gotcha.
So then what will happen is you just buy the token that'll represent a Google share, Apple share, Facebook share,
Okay,
Snapchat.
so the token would function just like a stock. So I would go on the exchange and I would buy the Google token, or
Yeah,
I would buy the Facebook token.
yeah,
Oh, okay. That's probably safe. So the company is probably putting up shares, to giving shares to the exchange, representing the number of tokens in circulation on the exchange. So
yeah,
the real stock itself is backing the token.
yeah. That's what the article said in the last sentence. It said you buy the representation of Facebook on the exchange, and there's a like
But
a
fractionalized though.
organization they partner with because it's organized through Estonia something something. But what their custody organization does, they then go to the exchange that their business is on and buy the stock, and therefore you'll get a token with a smart contract saying that you own this token is represented for one stock of Google.
Okay, well, in that I can see a benefit of what I said earlier. You can buy a fractionalized share. That's a benefit. What's the downside? It's
Oh,
the downside is you need a lot of companies on that
yeah,
exchange, because when you sell your Facebook token and you want to buy something else, you can only buy from other stocks, or tokenized stocks. Forgive my language. Other companies represented on that exchange. So if there's not a lot of companies on the exchange, then it's not a lot of options for you to trade.
right. And you can either do that or just trade back out into crypto.
Right.
That's
So that's one of those things I'd have to look to see who's represented on the exchange, and if there's enough diversity in that environment for me to that would appeal to me, because
and
I would want to move from Facebook and Google to something else, that may have a counter trend. because it's a trade. Okay, if one is going down and I see something else going up, so I would look for those kind of relationships. So it'd be something worth watching, because that way you could take a small amount of money and own a piece of Google.
And I'll read you the last to clear up anything. It says, while the tokens on DX.exchange represent real company stock, that doesn't necessarily require the company's involvement. Instead, a third-party custodian, which is called MPS Marketplace Securities, will secure company stock and issue the ERC20 tokens via smart contract, much like a fiat-backed. So it's a middleman involved, which is called MPS.
It's like that now.
True, you have a point. You have a point, and it's an Estonia-backed exchange powered by NASDAQ Marketplace.
Yeah, I mean, the stock market, you and your broker, you're not getting dealing directly with Apple and Google in that regard. So I guess then you just have to put your faith in the regulatory bodies.
So basically, you have to put your faith that this MPS Marketplace Securities is actually turning around and buying the company stock that you purchase on this exchange.
I'm gonna make the assumption that they've already matched that up. If company A, let's say Google, is going to have a certain amount of tokens in circulation, that in order to have those tokens in social circulation, Google would issue those shares to the exchange for sale. So I would assume, I would hope that that's the way it would work. That the stocks would have to already be there.
That's why I said you have to hope that this is exactly working the way it worked.
Right.
So, well, working exactly the way they say it's working.
I'm peeking over to see what Paul. This is up Paul's alley. He's the Wall Streeter here. Sounds a lot like trading. Paul wrote. Sounds a lot like trading covered options to me, just without the expiration dates. Possibly. Paul also wrote the NASD and the SEC will have a problem with they might even talk about something else. But yeah, we would really be at the trusting the regulatory bodies to look out for us on here. But it doesn't really seem shady with regard to the tokens as opposed to owning stock. And I don't think anybody I don't think anybody would buy this. Well, I'm not gonna say I don't think anybody. I would not trade these tokens if I was interested in being a long-term stockholder. I would go back to what you said earlier. If my interest was in being a long-term stockholder as opposed to a short or medium-term trader, if I wanted to be a long-term stockholder, I would buy the stock the traditional way.
Mm. And this it sounds pretty straightforward. Yeah. It's so new,
right.
And the SEC is not doesn't have any hand in it. It's just so new, but the ideas is in the practices.
The reason why the SEC doesn't have a hand in it is because it's in Europe, part of Europe, Estonia's commission. So. I think that for the most part, this is kind of like synthetic, right? It's kind of like like having a Zima or something like that. You wanted to drink alcohol, but you bought yourself one of those IPA ales or something like that.
Right, but it's still worth watching, because if it works there, then Americans might, gonna want it. So keep an eye on how it's doing, because it won't take long. For it to be a product in America, if it goes well, if the demand for it is great enough. So.
All right, let's jump to the next article.
Did you skip one of the articles?
Yes.
Okay.
Yes, it was the precious metals, because.
Okay. No, I just.
Yeah, it's pretty. Yeah, that was pretty redundant.
Gotcha.
All right, this one is from CCN.com again. Bitcoin price will tank below $3,000, says trader who predicts mass sell-off. The Bitcoin price will crater below $3,000 amid a mass sell-off. That's what futures trader Anthony Grisanti predicts about the ongoing crypto winter. Quote, I'm going for a move down to $3,000, which would represent a real weakness in this market, Grisanti said. Grisanti told CNBC. It will be the driver that gets people to bail out of this and push it even lower. Grisanti is a CNBC analyst who previously traded energy futures at Bear Stearns. Like other crypto bears, Grisanti believes it's only a matter of time before Bitcoin collapses. He attributed the recent price volatility to investors selling off their Bitcoin holders as they head for the exits. Every time every time this market does run, people are liquidating their positions, Grisanti says. Whether or not they are liquidating outright or the futures, they are all liquidating. So I'm looking to sell this at $3,800. At $3,800 is where I want to sell it. There's some resistance around $4,000, $4,100. So the sky is falling. We'll wait and see.
Yeah, I don't really have much to add to this, but we'll look at the chart during that part of the agenda. But yeah, I will say this: it's a confusing chart. I've watched other people who I respect chartists on YouTube. They're just as confused as I am. We don't know where the bottom is in this thing. You know, one level, I see cleanly we can get to the $1,400 level. Not no can. I believe we definitely going there. Okay, this bottom we got right here not gonna hold. Now after that, to say that is the bottom is too early. It could go even lower. I don't really feel that sure to say that that's the bottom. But you know, we'll look at it when we get to the chart section.
Yeah, my sentiment is the same as you all's.
Yeah, I don't really have anything to add much on that one.
So if we got any hodlers in the house, press 1.
Young Grizzly, where you at?
I know how you feel. You know, don't feel if it makes you feel any better. We all have been there. You know, we've had our hearts in something. We held on. We take a beating. You know, what you're supposed to learn from this. So I call this tuition. You paying for your education.
All right, this next article is from EthereumWorldNews.com. Litecoin price analysis. Charlie Lee confident as LTC melt below $35. For a long time now, talk has been on proof of work consensus algorithms and their modus operandi. On one hand, the transaction confirmation protocol has been around since early 1990s, only getting traction from early 2000s after Bitcoin rollout. On the other, the system is a hallmark of decentralization, but gobbles up power because of energy demanding mathematics. As we know, power is not cheap, and this has been cause of debate for the better part of Q3 or 4 of 2018. Litecoin is one of the many altcoins powered by proof of work algos, but the rise of the so-called efficient and scalable alternatives using proof of stake or even DPoS, decentralized proof of stake, has led to questions on long-term viability of this decade-old system. It was even made worse by Ethereum Classic hack, and although Charlie Lee was the one who defended the platform, saying that decentralization leads to susceptibility, and as long as decentralization exists, then at one point a network must be prepared to bolster its security against a double spending attack. It's a race for computational power, depending on how cheap it is to rent hash power from sites as nice hash, then double spending attack can come in fast, devastating projects. For example, to successfully double spend, in the Litecoin network, Crypto 51 theorizes that it will cost $21,461 an hour, which is expensive but affordable to determine for determined groups or organizations. Meanwhile, Litecoin, like the rest of the market, is melting. As spot prices, LTC is down 5.5% against the greenback, but encouragingly up 3% in the last week. It's still perched at eighth. From the candlestick arrangement stops, excuse me. From the candlestick arrangement, stops of our previous long positions have been hit, and it appears as if sellers are snapping back to action, unwinding gains of early January 2019. Still, we retain a bullish outlook, only shifting projections if prices drop below November 2018 lows of $30 at the back of above average volumes. So they're pointing to candlesticks. That's Dollar Will's favorite thing to play with. You have anything you want to add to this, Dollar Will?
No. We're gonna look at it. We'll look at it when we get there, because I can't. Some of the stuff they're talking about, I can't picture it in my mind. But yeah, I like that they're talking about support and resistance and candlesticks and 50% Fibonacci retracements and all that stuff. So you guys should all, be somewhat familiar with that kind of stuff. So we'll take a look at it. But I have a question. What is give me your opinion of all of these cryptocurrencies that are falling. Is Litecoin one of those that we should consider buying when the dust clears, and why?
That's a Lionel question.
That's a use case question. I'm asking you, what's so special about Litecoin? I mean, is it special, and why?
Litecoin is Charlie Lee created Litecoin to be the silver gold. That's what he says. So Litecoin has the same code as Bitcoin. It was designed to be able to be like gold is, let's say gold was used to buy cars, houses, and so forth. Litecoin to buy candy, chips, groceries. That was the purpose of Litecoin.
Okay.
It's silver to Bitcoin's gold. Then you have these other Bitcoin forks, such as Bitcoin Cash. The brand new one is Bitcoin SV, or Satoshi's Vision. Bitcoin Gold. Those are just, in my opinion, are redundancies. I would say, huh?
I'm sorry. So you're saying Litecoin is a Bitcoin fork?
It's not a fork. It just took its code.
Okay.
It's just not a direct fork. Charlie just took Bitcoin's code and created his own coin.
Okay.
And when he created it in that fashion.
Yeah, Litecoin was supposed to be more of a staple coin. Now I'm saying that Litecoin is supposed to be more of a staple coin. So you're supposed to be able to buy your staples at the groceries.
Meaning that they're going to get support from big growth like Walmart and people in big stores.
It was supposed to be the case for point of sales operation. That was supposed to be the driving factor, because go back a couple of years ago, 2016, there was actually ATMs like Liberty ATM or whatever the name was, where you can get Bitcoin at the Litecoin at the ATM.
Oh, okay.
And it wasn't that expensive at the time. Even at Litecoin's peak, it wasn't that expensive in comparison to where the price was for Bitcoin.
So when the market stops throwing shade on all things cryptocurrency, is Litecoin one of those coins that you, Mike, and you, Lionel, that you will have interest in?
Yes.
Okay.
Yeah.
Good enough for you. Good enough for me. I'll put it on my list of things to watch. Okay.
And now we are at The open mic, Dollar Will's chart analysis.
Okay. Let me see how this is going to go.
Oh wait, you had a article from the Chicago Tribune when the government
Sure.
shuts down these.
Yeah, yeah. Let me go ahead. Let me stop this share. Yeah, go for it.
All right, let me just knock this out real quick. All right, this one is from the ChicagoTribune.com. What the government shutdown means for your mortgage. The partial federal government shutdown is complicating the already complicated process of getting and managing a mortgage. For one thing, the political storm is like severe weather at a major airport. You can expect minor delays or worse. And if you're among the 800,000 federal employees going without a regular paycheck, it could mean a trouble. It could mean trouble making a house payment. How's it? Here's how the shutdown is affecting home buyers and homeowners, and what you can do about it. If you're getting the Federal Housing Administration, or FHA, or a Department of Veterans Affairs loan, it's likely you can expect delays in the underwriting process, and it's possible your closing date will be pushed back as well. There's good news for most FHA qualified homebuyers. Single family FHA loans are being funded, even during the shutdown. FHA home equity conversion mortgages, known as a reverse mortgage, and FHA Title I loans, financing for permanent property improvements and renovations, are the exception and won't be processed during the shutdown. The processing of VA loans will continue according to the Mortgage Bankers Association, but you may have to wait. Support staff at the VA and the Department of Housing and Urban Development who handle underwriting or entitlement questions, quote, are unavailable. So FHA, VA borrowers may experience delays, says Ted Rood, a senior loan officer in St. Louis. Because of the shutdown, VA and FHA spokespeople weren't able to provide an estimate of how many borrowers could have their loans delayed. But the most recent data suggests delays could potentially affect thousands of borrowers. In January 2018, the FHA insured mortgages for 64,401 single-family buyers, or those of those 82% first-time buyers. The
Yeah,
VA doesn't report loan guarantees.
yeah. I just want you don't have to. This is the article's kind of long. The only other section I think is key is scroll down. There's something about payment. This is for people who are not getting money. It's got some information here about how paying your mortgage. And you scroll up, you might have missed it. Lenders, if you're considering, nope, going up. If you own a
If you own a
home,
home but aren't getting paid,
yeah, go for it. Yeah, there's some information in there about forbearance. Hello,
having
you
to
there?
drop off.
Yeah, hello, can you hear me?
Yeah, we can hear you.
Okay. Where'd the article go? It says something about I think it's telling people to talk. Let's read that section about if you're paying your mortgage. I don't want to misrepresent what it's saying. I think it's encouraging people
Okay.
to work with their mortgage holder, to get some leniency with paying your mortgage. So,
If you own
yeah, go for it.
if you own a home and home, that's so grammatically wrong, but aren't getting paid. If the lack of a paycheck has you worried about paying an extension mortgage on time, contact your loan servicer immediately. Explain your situation and ask about alternatives. One common option is forbearance, an arrangement designed to help homeowners during periods of financial hardship. Forbearance temporarily reduces or suspends your mortgage payments while money is short. For example, Wells Fargo and Loan Depot list forbearance on their websites, though though cases are approved on an individual basis. A short-term loan that makes up for missed pay is another possible option. Navy Federal Credit Union, for example, is offering one-time zero payment APR loans for up to $6,000 for federal employees and active duty members of the Coast Guard who typically use direct deposit for their paychecks. Talking with your lender, before you miss a payment could keep your credit score from suffering a hit. We will work with each customer individually and can help with things such as late fees and not reporting to the credit bureau. Tom Kelly, J.P. Morgan Chase spokesman, sent an email. So, interesting information.
Yeah, I just wanted to make sure everybody heard that part because contrary to popular belief, the bank doesn't want your home. They really don't. And aside from this particular shutdown, this crisis that it potentially causes for lots of people. Anytime you can't make your mortgage, you got a problem. Talk to the bank. Call them. If you think you're gonna, have a problem making the payment for, don't. Basically, the quicker you call the bank, there are programs out there to help people. But the longer you wait, there are programs you become ineligible for because you've waited. So don't be silent. Call your mortgage company. Work it out. Put the pride aside. Protect your credit. And for whatever it's worth, generally when people don't pay their mortgage, they're not kicked out of their house. It takes a while. It's a long process. It could be a year before you're out of the house. I mean, in some cases, people have gone as long as 2 years not paying before they really get put out of the house. So, but there's things you have to do in the process. So don't wait. Nope, the bank does not want your house. The bank is not a real estate company. But that's I just wanted to make sure people, got hip to that. But let me find my on these. I'll get it together. I'm getting it together. Give me a moment. Okay. Okay. Y'all see this page? Can everybody see this page?
Yeah.
Yeah, we can see it.
Okay. I'm wondering if I move to another tab. Do you see? Did the tab change?
Yeah.
Yeah.
Okay, good. I'm just wondering if you answered that. So it's the whole window. Where did the money go? So the market's been moving up since like December the 21st, I believe. And what we have here is a mutual fund by a company called Pro Fund. I just like to look at it to know where the money's going. So this is a Latin America fund. So now these are things that are really just moving up. Now, I in my opinion, this is a counter trend. So this is meaning that this rise we've been experiencing for the last 2 weeks, in my opinion, that's a fake rally. I don't believe any of it's going to last. And so all of these things, it's not going to last. Like, oil, Latin America, small cap stocks, internet stocks, China. I don't trust any of it. I think this one, I'm gonna set aside. I'm not gonna address this Latin America thing. I have to look at that some more. But this is going to be the good stuff, in my opinion. This fund that invests, it shorts small cap stocks. It's going to short China. It shorts the NASDAQ. It shorts mid cap stock. And so let me see here. I'm gonna cover the general market as well when I get to the big charts, and you'll see that in these 2 weeks, although it says 20%, 17 to 20% for these are going down, you'll see on a bigger chart that that's just a healthy pullback from the bottom that it sprang from, and it's probably a very good time to look at it. Time to consider jumping into it. But hold on, let me see. All right, yes, this is a chart showing just the sectors, and we see the inverse stocks. That means funds that short the market. Just in general, funds that short the market are down 15%. So it'll make sense later, but this kind of shows you where you can go. And this page is stockcharts.com, or you can just Google market carpet. You can find other such tools like this to see where the money is going. So and I'm talking about this for the purpose of stopping people from panicking. There's always somebody's always making money somewhere in the market. Okay, but the news, it's going to focus on the devastation, and rightly so. News is what's new, and so now we have here is the S&P sector ETFs. Okay, energy. This is going to get killed. So this is only for the last 14 days. Okay, let me try 13. I think, yeah, it's that gets me the Christmas Eve. Let me see. I'm looking here. I'm trying to get it here from the. Okay, yeah, that looks about right. All right. Got energy, consumer cyclicals, communication services. So you guys should be doing this on your own. And over time, you'll see this change, and you'll watch as the devastation is happening. You'll watch the money flow from this group of stocks, from the winners, this short term, from just this period around Christmas Eve, and you'll see these utilities. Because if you remember a couple of weeks ago, utilities was one of the areas that was soaring high when the market was tanking, and the money went to utilities. So utilities has slowed down a little bit, and you got the staples. That's like your grocery stores and stuff like that. Real estate, I don't trust this. I think this is going to continue to fall. I wouldn't trust financials either, or materials. But the utilities is the one for sure. But we're gonna look at that too. We're gonna look at that too. A longer view of that. Let me see what that symbol is. They used no, that's not an E. Oh, why didn't it tell me the symbol? I'll get another one. They usually tell me right here what the symbol of the ETF is. Doesn't do that. Okay, let me see something. Oh, I got a company here. I don't trust that one though. Dominion, right? That's the one I'm gonna look at. All right, I know what that one is. Okay. It's your major indexes. Let me see. So we got in the same period. I'm gonna go back 13 days. I think that's what it was. So we got the NASDAQ up 13 and the Dow Transport. And this is all since this little route here. And in my view, that's fake. It's not going to last. Here we go. This is going to be the place. Industrials, that's the Dow Jones Industrial. I think this is going to continue going down. So, but we're gonna look at it here. With all of that in mind, let me bring up Are you all seeing this chart right here?
Yeah,
Are
we
you
can see it.
seeing? Okay, good. You're seeing the dashboard, and get this watch this thing happening. And look at good old S&P 500. All right, this is the big run since 2009. So, you know, technically, yeah, this support line is still holding. I'm looking at a monthly chart right now. We started this run in deeply oversold state back in 2009. I wouldn't, there's no way we're not going to end up oversold again. This is a big correction. Okay. So this recent move is just a blip. We didn't make a higher high. Let me even help it out and go down to a weekly. Okay, it looks like it may have done that on a weekly. Let me see this high. I'm looking at the information box in the upper left. The high is
You stopped
26.01.
sharing your screen.
I did. Okay, thank you. It fell off. Oh no, it didn't. Let's see. So you're not seeing anything right now. You said you're not seeing it. Okay, I'm gonna drop the screen share and reestablish it. Okay.
Yeah.
Can you see it now?
Yes.
Okay. Let's see. I'm looking at the information box in the upper left. I'm looking at the high 2601.13. And this says 2597.82. So technically not even on the weekly chart have we made a higher high. But let me see what the Fibonacci tool can show us. Generally, okay, I'm gonna call this. This looks to me like a clear ABC pattern. Usually after that, you get like a 50% retrace, something close to that. We'll see. Okay, well, 50% would be about here. So it could go some more. Or again, this is rough. It doesn't have to go exactly. This is all fuzzy math. But I'm not buying this. Now, what's strange when you have corrections like what we're going through now, these types of corrections, in my opinion, we're correcting a trend that's almost like 70, 80 years long since the quote unquote Great Depression, or it's a part of that. It's a fractal within that wave that started that long ago. Now, in the near term, it's a correction of this trend that started in 2009. So while this stochastic oscillator is showing that we're over sold on the weekly chart, let's see what it looks like on the monthly. This is when it gets a little confusing with Elliott wave theory or any. I'm not going to put this on Elliott wave theory. I'm going to put it on oscillators because the data. These oscillators can be, when in a normal environment, they can be pretty reliable. But in this environment, because it did all this movement right here, and this oscillator hardly moved. The price did all of that. It's hardly ever moved. So I'm saying right now, I don't trust this oscillator either. So I would be inclined to look at things like, does it make a higher high, and just put a trend line on it. Because the movements are going to be so extreme that on the shorter term, like even like a daily, and sometimes like see the weekly showed that we were still oversold, but the daily is up to 89, and anything above 80 is overbought. So you get a lot of weird readings with things. I mean, this looks like a clear ABC pattern to me. And we have even if we come up to wherever that 50% line was, bottom line is you can put a trend line right here, and you see we're overbought. It's going to go down at some point soon. I'm just as the guy in the article was talking about crypto. I've seen other articles saying that they don't trust this rally, okay? And I don't trust it either, for my own reason. Again, I start with the overall thesis from a very long-term chart. And I've been saying for over a year that this is wave 4, this decline is wave 4 in Elliott wave theory, on a trend, or a chart that goes back, over 100 years. That's my view. Now, somebody might hear that, think that's extreme, but they won't think it when it's all over. But in the short term, not knowing where we are, a lot of people will pick like a 2-hour or 4-hour or a daily chart and just kind of trade this oscillator without really knowing exactly where it's going to go. So you catch this flip whenever this happens. It hasn't happened yet. So as it stands now, it's not, I can't say that it's falling now because it's still green. Okay, it hasn't reversed until it reverses. So we have this momentum indicator. This stochastic is a momentum indicator, although technically it is in an area where it normally reverses because it's overbought. Anything over 80 is overbought, but you can't count your chickens until they hatch. Okay, so technically it's still moving. But when you see we're getting close to, say, the fat part of this green candlestick, fat part of this red, the price is approaching these levels, and we're already overbought. So is it smart to hold right now? In my view, no. In my view, you're being greedy. If you made all this money right here, consider yourself lucky. If somebody took a beating from here in October all the way here, and they made this back, and they flip pretty soon and make money on those utilities and stocks that should continue to rise, they could end up making back all the money that they lost. But if they just hodl, they're gonna give it all back, all away. Now, the key is when this reversal happens and this oscillator goes back from overbought down to oversold, the key will be, does the price make a lower low? So if this momentum, when this momentum oscillator flips and goes back down to the oversold territory, if we make a lower low, that will tell us that the downtrend is still in progress and that this was just a normal retrace, in a otherwise continuing trend. But we won't know that till we get there. So I would not bet against this momentum. Now, if we were in a long-term bullish market, you wouldn't care about the oscillator. You would just buy it and just deal with it because you would be a perma bull, and you can tell yourself, well, the market always goes up. Well, I'm saying this time is different, and there are lots of people that are still perma bulls, and they think this is the time to buy, and that everything is situation normal. But I got the dollar. The daily chart is in overbought territory. And we already looked at the weekly, which is telling us that it's oversold. And I got the monthly chart oscillator momentum still pointing down. And we're at 61. And we're not over. And we got a long way to get back to the 2009 area. So I would trust the daily and just trade this oscillator. I would continue. I would get out, but for somebody who's bullish, they could stay in. They could stay in until they see a candlestick make a lower low. Get a red candlestick, put a trend line here. If it breaks the trend line, they could get out, and they could see, what happens after that. They could either sit on the sideline or they can invest in one of those funds which shorts the market. But in either case, whatever you do, I would watch it. I would not sit, just put the money in it and walk away and not watch it. I would pay attention to it because things are moving fast. Let's see. What else did we want to look at? We wanted to look at, now, I'm sorry, the other interesting thing that I think is going to be the story in this market is, get all this crap over here. Oh, that is, I messed that up. Okay. This is gold. Gold should have been died, but it won't. It just won't die. It's going to. All right. I got this chart. There you go. Okay. The high was actually here from here. And yeah, so this is a confusing chart too, because you got the monthly saying one thing, and like again, same argument as before. When you get to these extreme moves, these extreme corrections for long periods of time, the oscillators can kind of throw you off. And so even technicians will argue against each other about what the market is doing. So the best way I find is, sure, I got my opinion, I got my bias, but I will take like an overbought oscillator. In this case, it's the weekly, and I would trade that. I would wait, break this trend line, flip, get this stochastic to flip, and I would trade that. But again, I'm biased. I'm of the view that this thing is going down, and if I could trade this weekly. And yeah, see the daily is stochastic is overbought too. So I got an overbought weekly and an overbought daily, and the momentum is already flipped on the daily. Okay, so we're at a weird point, and I think that resistance line goes back to the top. I think I already had this here. Right. This was a price peak. So I just put a resistance line from here, and this was a prior peak, and the price ran right to this point. So we'll see if it runs out of steam. So the price returned to a resistance area, and it's already overbought. I don't trust it, but that's just me. All over media, everyone is telling people to buy gold. I'm telling you, I don't buy it. Okay, and so we'll see what happens in the next week. I think gold is going to be the most important thing for people to watch in the next week. All right, you got this little trading sideways right here. You got this low here of 1303.08. That's the information box in the upper left. This peak here is 1297.90. Hey, it's gonna die. That's my view. All right, here's the deal. The show is all about this. Can you guys still see the chart?
Yeah.
Okay. The whole story is about the dollar. It's about the dollar. I haven't touched this. It crashed through my little channel. I have my little channel here. So the dollar looks like it bottomed right here on, what day is that? The 9th, 2 days ago. It took out this prior high. Okay. And so we'll see. So in this coming week, if the dollar takes out this high, it's really going to freak out gold. And that's going to cause a change in the bias. All of the people arguing that gold is going to rise, that's going to be hard for them to continue to be bullish on gold. Okay, so we are still, we've already flipped here on the stochastic, it's going north. The fast lines are orange, it's crossed over. Okay, so that's a good sign for the dollar, which is going to be bad for oil also, not just gold. Okay, see now this is showing me it's still weak. So, I'm going to, of course, I'm probably just trade the dollar and see what happens. Now, this is not unusual for stochastic to turn right at the 50% line, but we'll see. We'll see how it goes. But there is general confusion everywhere, be outside of me, about this dollar, even on the quarterly. I'm. It could be that I'm stubborn. It could be that I'm just super biased. It could be that I'm irrational. So I see the monthly is showing that it's flipped and it's not showing positive. Let's see, the only one that's supporting my view is the daily. So in the short term, I'm going to see what happens if this comes up, if we break out of this channel. Because there are times, this is a good time for you guys to be watching this, because a lot of times these oscillators will look like, oh, it's just so easy. The fact that we're going to watch this together, you're going to see some weird things. For example, like this oscillator came up here, got overbought. It started trending down. We call this a divergence. It started trending down. Price still went up. I think we're going to see more strange stuff like this. So this is when it gets really kind of frustrating as a trader, and it helps me to have a concept like Elliott wave theory, which has me have a long-term view based on a trend that started long ago, like even the 2009 trend or the trend since the Great Depression. So I'm biased because I have a thesis that I'm working towards, and so far it seems to be working, even when the oscillators betray me. So, but in the near term, I just use the short term oscillators like the daily, and I see how that goes. Now, if we get overbought here on this daily, then I'm gonna have to acknowledge that and see when we go from overbought to oversold, how far the price falls. Do we make a lower low? So if we go from overbought to oversold, then back down to oversold to overbought, then back down to oversold, and the price makes a higher low, then that's telling me the trend is going higher. But it's too soon for that now. I won't know. So, but it looks to me like we got a lot of momentum to go, enough momentum to make a higher high and break out of this downward channel, which started in mid-November. So that's the deal with dollar. And now this is going to put pressure on gold, and the rise in the dollar here is going to put pressure on oil. It's going to attract currencies from around the world, so it's going to hurt the euro. But that's my thesis. We'll see how it goes. We want to look at a little bit of crypto stuff. Let me look at Exxon. Let me see what Exxon is doing. Oh, this was key. This was some scary crap. Exxon. I just want to see something here. Yeah, same. All right. This trend line here has been running. You can go all the way back to, that's 2002. It's been running a long time. It just broke it, like in this quarter, or was it this about a month ago or something? Yeah, this is serious. So we're gonna, this is a weekly. Let me go to the daily, because again, this could be one of these. This is great. This could be one of those times when I'm gonna love to see this price continue to fall and this oscillator do something silly like just go sideways. This stochastic oscillator just goes sideways. It's just when we get to these extreme corrections, the oscillator does some weird stuff. Whereas we can see here on the daily chart, we've made the oscillators come higher than this. It's approaching the previous arc, and I expect it to flip. The price looks like it's flipping now. If it keeps going, it's going to pull this momentum down. I think that's what's going to happen, and then we're going to continue to go down. And this line, the common saying is, let me see, I gotta open it up. The common saying is prior support becomes current. You just see the line gets, if you don't open it up enough, the integrity of the line doesn't hold up. All right, yeah. Once you break through support line, the price usually comes back up to it without crossing over. It comes back up to it, retests it, confirms this prior support as current resistance. So I think that's what's happening here. I do not believe that Exxon is going to go above this price. And so all this is corresponding with the dollar. The strengthening dollar causes weakness in oil and gold. So this will be something to watch too. So, we got a good ways to go in Exxon. Let's see. Now I mentioned small cap. I'm only gonna do one bearish fund. I'm gonna do this one. Good Lord, this is ugly. Okay, this is TZA. It's called a small cap bear. This is 2009, 2008. This was when the stock market was taking off. And so this devastation here is people betting that the market was going to go down, but the market went up. So this fund just got devastated. So this is a small cap bearish fund. But when the market starts to fall, this is where the action is. So I need my oscillator back. There you go. Okay, so we went from overbought around this peak to oversold. We like at 4 on this stochastic oscillator. Let's take a look at the retrace here. Let me see. This information box is annoying. Okay. Okay. We've taught the magic number in Fibonacci is 1.618 or 0.618. That's called the golden mean, and that's what the Fibonacci sequence is really based on. Okay, so when you have a run, just because of the quote golden mean, you're looking for like a 61.8% retrace. So 61, let's say round it off, say 62% from 100% is 38. Bam. I would expect this thing to turn around and start heading north. And it looks like it's complying with the magic number. It's art. It comes right down to oversold state. That's why I'm saying I cannot trust the S&P and to continue to rise, because this small cap fund is, I think it's going to flip and go up. It's going to continue to rise. And so this rise started at $7.80 back on October the 31st. It went here to 1869, down to 12. It's my opinion, this thing's going to continue going higher. This market is not going to continue to rise. And for me, I would love to get on this right now, but I don't own this. I'm in something else. but this is good stuff. We'll see how it goes next week. Again, this is, I'm not a financial advisor. Get your own financial advisor. I'm just a guy on YouTube. Everything I'm saying is for educational purposes, entertainment, and education. I'll throw in a few jokes. Okay. Now we're going to try to get to some Bitcoin. I think I want to see weekly. No daily. Okay. All right. So you see, we got what we hit the low. We were over sold. Notice if you can see. Oh, I don't want to get to that. Let me just say this: we went from oversold. It actually never even made it to overbought, and it flipped. So this is really a lot of weakness. When you see on the oscillator, this thing would get to, from this point forward, it would get to like 67. That's it. And then now overbought is 80. These in a normal situation, this is optimism. When you at least get the momentum to come up to 80, this thing people are bailing on this thing at every chance. The slightest bit of strength, they fading this. It doesn't even get to the technical definition of overbought. There's not enough optimism to even hang in there that long. So when we go from where we are now to oversold, which is below 20, we're gonna pay attention to see if we make a lower low. If we make a lower low, then that's confirming for you that the downtrend is going to continue. So I got a trend line going from the high 20,000, a resistance line going, and I think we're going to drop pretty quickly here. And I'm so confused by this chart that I'm going to do something just as so primitive as just to keep updating this line, and I'm not going to consider buying this until the price crosses above this line. So at some point, Bitcoin's going to reach a bottom. It's going to crash above this line. It's likely, it doesn't have to, it's likely to turn around south and come to the line without going below it. And that'll be the point. And I'll be looking at my oscillator to see if we've crashed through the line, if we've turned around to come back to the line, and if we've then be returned to an oversold state, having made a higher low. So that means I'm not going to aim for the bottom. I'm not trying to get the absolute best price. Now, short of that, Bitcoin, what interests me is, let's see, we got a little valley right here. See, you see Bitcoin broke out above here. And then, okay, I'm trying to get a line. Let me see if I can double that line. There you go. Let me do another one. I don't know what the heck happened to it, but that's all right. All right. We could fall between this gap here, this no man's land. So this is why, in my opinion, you hear a lot of technical people saying Bitcoin could fall to the $1,500 level. It's because of the breakout between here and then the retest establishment of this low here. So it leaves a trough where it could fill that space. And that could be the bottom. We'll see. but I feel pretty certain to say we absolutely go into this area. That I would go to the bank on that. Now, is that going to be the bottom? I don't know. I'm so confused. I'm just going to put a trend line on it. You know, I mean, I have some other projections that could take Bitcoin down to $600, but I'm not going to go there. I'm not going to go there. I'm just going to take it as it comes. But I feel pretty sure that this low is not going to hold. This is not going to hold. So let's see. We talked about Litecoin, daily chart, overbought, same as Bitcoin. It's going to fall, going to crash through. Yes, this is nasty. Well, you know, this devastation is ugly. This thing is like this thing is like it's an ugly chart, and there's no real rules about how far something like this could fall. So the same thing I did for Bitcoin, I'll do here. I would put a trend line on it and wait until the price breaks the trend line. But this thing has a good deal to go. I mean, what's scaring me about this, if I use my Fibonacci extensions, this is what's confusing. When I use my Fibonacci extensions the proper way, which you're supposed to measure it from here and then do a Fibonacci extension, it takes me below 0. Okay? So that's scary. That's scaring everybody. I mean, the tools of the technical traders are not reassuring to us. So that's why you're not going to see anybody jumping in to save this stuff anytime soon. So that's why I asked you that question. Is Litecoin one of those, in terms of the use case, one of those coins you have confidence in? Because I'm going to put it on my it's on my list of ones to watch. And at some point, it's going to be so cheap that, I'll be able to throw some lunch money at it, but this bottom's not going to hold, So one thing we know for certain that this oscillator is going to go from its current state to oversold. Now, what we're looking to see is when this oscillator gets to oversold on the daily chart we're looking at, will we have made a lower low? If we've made a lower low, then just put a trend line on it. And it'll be over when it's over. And your first clue that it's safe is when the price breaks the trend line. And then the price should recoil to retest that trend line. But until that happens, no hodling. No hodling. All right. What else you want? XRP? All of these, I think, is pretty much similar. They all look. That's another thing that's weird about these cryptos. All of the charts look very similar.
They're tied in with Bitcoin itself. So wherever Bitcoin moves, they tend to move as well.
You right about that. This is Ethereum.
So
Go ahead.
No, I was just going to say that maybe we should look at Apple stock, Amazon stock, as well as Tesla stock.
Oh man, that's ugly. This is a monthly chart. It still got speed to go. This is ugly. Man. Okay. All right. So technically, a lot of technicians are looking at this. We're looking at this. Let's see. This was resistance here. When we broke through here, this was resistance. So everyone is looking to see if this. Let me look at the peak price. 134.54. I think that's it. Yeah, 134.54. Yeah, that's it. 134.54. Everyone's looking to see, is Apple gonna hold? Is that 134.54 gonna function as support? If it goes through, if the price falls through that, people really going to be confused. Do I think it's going to go through there? Heck yeah. Heck yeah. So we'll see. Even on the quarterly chart, man, we got a lot. We got a long way to go. This is, man, this trend started, and okay, this is 2009 here. Man, we got a long way to go. I wouldn't be surprised if we end up. I don't even want to guess at it. Let me give it some greater thought. Okay, 233, 89. From here, okay, the high is 233. We already got the 144. $89 is on the table. $89. I'm not saying that's the bottom, but I think that's in the cards, and that gets us right down in here, man. So yeah, yes, I think we're going to take this. This prior resistance is going to fail, and then we're going to get. Then this low will be under attack. This low that started this whole trend. So basically, this fractal that took the price up to its high. This whole leg here is under attack, and I would expect the price to dip slightly below it before we have any serious kind of retrace. And I'm not saying the trend ends there. I'm saying the trend don't end there, but we might get a pause. We might get a pause there, but $89 from here, I don't see nothing stopping it. Especially since if this is a downtrend, and in a downtrend, just like in an uptrend, you have to make a higher high. Well, in a downtrend, you have to make a lower low. So I would not expect Apple to not make a lower low of this fractal. So hodlers, they're gonna take a beating. But that's my biased opinion. I mean, look, traders, we all have opinions on things too, not purely based on any one particular time frame we're looking at. Okay, I mean, I guess it depends. If you're a day trader, I guess you could look at it that way. But I'm not a day trader. I'm a Elliott wave trader, and I start with a long-term opinion. If my long-term opinion is wrong, then I will take a beating. But at some point, I will change my bias, my opinion, or I'll notice that my wave count was wrong. But that rarely happens when you're talking about a long. You're not going to be off by much. For example, I called the peak in the price of January, and that wasn't it. So that was my error. But we'll go on to make a lower low. So that does not change that does not invalidate my longer thesis. It just invalidates let's say my use of the Fibonacci extension tool. That's all. But the fact that we made a lower low, that we went below the April low, that reassured me that my thesis is still intact. So I'm biased in that view, and so we'll see how it goes. That's how I trade, because I know that these oscillators, you cannot trade blindly just by the oscillators alone. If that was the case, day traders would never lose money. Because you can have every trader will tell you they'll have a little system that works, and then it doesn't, and they don't know why. Well, my answer why is, well, if they were an Elliott wave trader, they had some bigger philosophy that governed their thesis. They would know why that thing that was making money for them no longer works. Because my answer would be because we're at a different point in the wave cycle now, so those rules don't apply. So so you have to have a bigger concept. than just looking at the 1 minute and 5 minute chart, thinking you can play every swing correctly. Okay, so that's Apple, and what was the other one? Amazon.
Apple, Amazon, and Tesla.
Okay, so we got I just put a support and a resistance, and this is a megaphone pattern. It's, you can look it up. I'll leave it to you guys to look it up on Investopedia, but this is what's controlling. When Amazon breaks that, it should pick up speed on the decline. But again, we got negative momentum on the monthly. We are overbought even on the quarterly, and that's flipped negative. I'm gonna do a stochastic on that retrace. Now here we go. See, you always get something confusing. The weekly saying that we're oversold, and the daily is saying we're overbought, but it has not lost momentum yet. It hasn't flipped, but the price is going sideways, not going up. This is weird. So you got the momentum going up, but the price isn't. So that's not good. That's not encouraging for people who are bullish. So let me put a Fibonacci tool on. Let's see, I want to do it this way. All right, let's see. If you wanted to say, if you want 100 to be here, you move the line, slanted inward. You want it to say 0, you move it the other way. So let me do it this way. As I said before, when you have a retrace, the retrace is usually about 50%. It's like this fuzzy math. It doesn't happen all the time exactly. This went right to the 50% retrace line and start acting funny. So, when you start seeing the price start, moving sideways and doing something strange right at a point where, according to Elliott wave theory, it usually reverses. That's enough for me. I don't wait around. I'm out. Especially if I made all this money. At some point, you have to, don't be greedy. So now, again, I'm not a day trader. So even if it goes up a little bit or whatever, I can take that. But a day trader, that's bad for them. If I made all this money, I'm just trying not to give it back. So, but on the daily chart, we got a 50% retrace. We're overbought. My long-term thesis says we continue going down. I would get out of this, and I would watch this oscillator, see what happens when we get to over sold territory on the daily oscillator, and I would check to see if we've made a lower low when that happens. If we make a lower low, price goes below this point, and this oscillator is oversold, then in my mind, the bias is still down. That's it. That you just have to go with the flow. You can't wish this thing to move in the direction you want it to go. You have to just see it for what it is, and ride the wave. There, as I showed in the beginning, there are other things you can buy. There are other ways you can make money. I don't fall in love with these companies. They're just here to give me money while I ride the trend. I'm only in it for the good times. That's how I look at it. And now, I'm not saying that's right or wrong. Some people are investors and they want a relationship with the company. I don't. I'm just riding the trend to pocket some money. That's it. And if it's a good, and again, I don't buy individual companies. I buy ETFs. So if I was interested in tech or Apple, there are lots of, or Amazon, there are lots of ETFs that have those companies in them. And I'll buy one symbol that has a basket of those companies in it. You know, it could have Google, Apple, Amazon, all in one symbol, and that way, I'm not caught up in if somebody stole money, if there's a class action lawsuit, president died. None of that stuff is going to really have a disastrous effect on my investment because I don't invest in one individual company. I buy ETFs that are industry based. But that's Amazon. Is there anything else you guys got in mind?
And then the other one was Tesla.
And Tesla. I'm trying to remember what is their ESLA. There you go. Wow. I don't know why I was expecting it to look uglier. Okay. Well, we see it's not, we're looking on a daily, it's not quite over bought yet. Let me look at a bigger view. Man, that's a lot of congestion right in this area. It's been going sideways, hell, over a year. There's no real action. Okay, so we got still got good momentum on a monthly stochastic. Let me see. The main thing is you can obviously see a trend line has not been violated. You can draw a trend line there. So as long as it's above that line, you're pretty good. But let me look at now. You got a flip here, momentum there. So you wanna look and see if this holds. You know, if it takes out this high, this would concern me. This concerns me. It's lost momentum there, but we'll keep an eye on it. And again, 80 is overbought. It's at 73 right now. It won't be too much longer. This is the daily chart. It won't be too much longer before it gets to 80. Okay. And let me see something. This is kind of awkward because it didn't do like it went more than 50%, but like I said, it's kind of fuzzy. If I'm calling this A, B, C, it could come this high without making a higher high. So what you're looking at on this chart is you put a trend line right here, and you watch this on the daily. If this daily flips, if this orange flips below this blue, and this trend line breaks, and you haven't made a higher high, I'd get out of this mess. I wouldn't mess with it because at that point the daily chart will have flipped without making a higher high, and it'll look just like the weekly. And then after that, you just trade that weekly and the daily stochastic and looking to see if you're making higher highs or lower lows with this trend line in mind. If violate that trend line, that's not going to be good. So it's not the season for Tesla is an expensive car. What is their do they have a bargain car at all? Is there such a thing? Is that oxymoron?
That's supposed to be the Model 3, but it's not really a bargain when it's clocking in at 35. Right. Kind of like the base model.
Right. And then not only that, you got dollar strength. Go ahead, Mike.
Relative to the other brands, it's actually considered to be an entry level Spirit. So I think Nissan's Leaf is something like 27 grand or something like that, or Toyota's PH. Well, I wouldn't even include Toyota's. BMW's i3 is around the same price.
Mm-hmm.
So they're all relative to their other entry level models, and I think that's where Tesla slotted there. So, but you
Yeah.
still have the incentive, the Tesla tax rebate. So the $7,500. I think that just ended last week or something like that.
Yeah, and you also got, the other thing is that the dollar strength that we talked about earlier, the interest rate situation, where people are not qualifying for home mortgages and car loans, and a time when people are getting their statements this month. See, those retirement account statements come out quarterly, and a lot of people are reading the statement this month, and this is their first indication where they can hold it in their hand and they can see what the downturn in the stock market has done to their retirement. And that's going to change people's sense of financial wellness. They're not going to feel so rich. And when people don't feel rich, they don't want to buy houses and they don't want to buy cars. So this is the wrong time for big ticket items, So that consumer, that's why the staples sector of the stock market is that's going to come in vogue. It's not there yet, but it will. I just think it's the wrong time. So I would bet against it. I think this momentum indicator here that's flipped on the weekly, I think this is the truth. This is the truth. And pay attention on the daily to see what happens, when this flips and when this trend line violates. See if we make a higher high. I doubt it. I doubt it. This is this big ticket item, and rent is too damn high. Nobody got time to buy no car. I don't care what quality it is. It's it's just it's a psychological thing, and it shows up at the counter when people go to buy things. No, no, I mean all those articles we
Yeah.
were seeing about closures of stores. That's gonna become closed. It's gonna go beyond the retail sector. It's gonna get it going to other sectors of the economy too. We haven't gotten to the big layoff phase yet. That's coming. That's coming. And so, when that reality comes, I mean, we just read an article about, the government shutdown and, forbearance for how people are going to pay their mortgages. Ain't nobody going to got time to go buy no car. Even think about buying no car. I mean,
No,
usually
cars have been sitting. Cars have been sitting on the lot since December 2018. They can't move them. I have a friend at the dealership who talks about it all the time. They can't move cars. The cars are just sitting there. They have to go buy a second and third lot or lease out a second and third lot to go park the cars on, because then they have to bring in new cars. And those old cars from 2018 are just sitting on the lots from May, June, July. They haven't moved.
right. I tell you, one
And they have to
store.
slash the prices.
I
They
tell
have to
you,
slash the prices. Go ahead.
no, go ahead.
No, I was just going to say that they have to slash the prices because they got to move inventory. Upper management is saying move that inventory now. Shareholders are wondering why they aren't turning the same sales numbers per quarter. I wish we could look at something like Honda's. Let me see if I can pull it up because they usually have the quarterly reports.
Let's see. Let me go quarterly on Honda. Yeah, they gonna bite it too. This thing we're getting ready to flip. This is a quarterly chart, and it's getting ready to flip. Now, the scary thing about a quarterly chart, it takes a long time to go from overbought to oversold. So, you know, you that trend is pretty reliable when you see that flip, and it's close to flipping now, or actually, it already flipped. So, I would doubt. Let me see. The high of this candlestick is 29.32, and this one is 30.57. I don't think that green candlestick is going to take out this red. I think we're going to, trend lower. We'll see.
Let me know when you're finished so I can share the screen.
Okay, and what was that? It was something I was going to say. Oh, one final thing about one exception to the retail. Let me see just one final thing, and that is, what is AutoZone? I'm trying to remember. That's it, AZO. I have not looked at this, but I remember the last time with the downturn, AutoZone seemed to do well because people keep old cars. They're keeping the old cars, and they, they buying those parts, man. fixing the old car in the driveway. So this chart doesn't really back that up at this moment, but I will keep an eye on this. I don't know if it's going to continue to fall, but we'll see. But I'm about to stop the share. But this is one I gotta add this to my to the watch list here. So AutoZone is one to watch. Let's see. Come on. All right.
All right, let me just jump in here real quick, and then we'll close out at 11:30. All right, it says this is from CNBC. And this is from January 3rd, last week. Dollar, you got to mute yourself, please. Automakers close out the year with decline in U.S. new vehicle sales, as I was saying earlier. Let me see right here. Quote, despite recent market turbulence, the data we have in hand suggests an economy that remains on solid footing heading into the new year, for Chief Economist Emily Kolinsky Morris said on a conference call. Consumers could seem to be looking through the market volatility to focus on continued positive growth. I want to focus on these numbers here. Ford reported an 8.8% drop in sales for December, with declines in passenger cars and SUVs and pickup trucks. Sales of Ford's F-Series pickup trucks, the top-selling U.S. brands since the 1980s, fell 1.8%. SUVs were off 4.4%. GM on Thursday reported 2.7% drop in fourth quarter sales, with declines for Chevrolet, Cadillac, and Buick brands. Toyota's December sales dropped 0.9%. Japanese automakers passenger cars were down 16.5%, including its flagship Camry sedan, which slid 32.9%. It's posted among gains in SUV and pickup truck sales. Fiat Chrysler bucked the trend in December, posting a 14% increase in sales. Its key Jeep and Ram brands were up 10% and 37% respectively. Nissan sales were up 7.6%. Interesting, they don't talk about Volkswagen, but
so wait a minute. I'm trying. So in the beginning, you said the darlings is the pickup truck and the SUVs, right? and those sales were down, right?
Yes, they were.
Okay, so do you think that the Nissan and those that are up, I mean, could that be incentive driven? You know, with this, you know, rebates and incentives? Do they offer an
Yeah,
explanation for
they're not.
why?
Yeah, they're not selling them at MSRP. They're selling them at slash prices. I think um, the Ultima was like $10,000 off sticker. So if it was selling for 28, you were getting it for 18.
Good Lord, they made them a
They
price
they
they
can't.
couldn't refuse.
You can't make profit off of something like that. I mean, yeah, you're moving volume, but you're not making profit. That's for sure.
Yeah, they paying interest on the loan to build that car, buy that car. They need to get rid of it.
Hmm. But it's like I was saying earlier. Those cars are sitting on lots. They need to do something to move them. Management is saying move them. Shareholders are wondering why the numbers aren't changing. Um, there you go. You know, they're not making profit off of these vehicles.
And you know what I think is scaring people when was it was it Ford when you guys said that Ford announced that they're not going to be making any more they're dropping a lot of their cars and they're going gearing up for autonomous vehicles. I mean that scares people. You telling me that I'm buying a car that's going to be obsolete? That doesn't help either.
Maybe to a millennial might look at it that way, but to an a full grown adult, they're holding on to that 2005 2006 car as long as it has 100,000 miles on it, under 100,000 miles on it, they're okay.
No,
Um,
no, no, no. I'm saying that's not going to make them want to go buy a 2019 car when you're telling me that you're getting ready to make autonomous vehicles and I could be really buying the last one of the model. I don't, you don't want to buy something that's a brand new that's already obsolete.
mhm.
So that doesn't help either.
Yeah.
So basically, how can Tesla buck the trend that you just described in that article? It can't.
What do you mean buck the trend?
We were Ulysses talking about we were talking about the future prospects for Tesla, and from what you just read, the trend for auto sales is down. It's going to likely continue to go down. How can Tesla go up if everything else is going down? It's not going to buck that downward trend.
People who buy Teslas, oh, there's so much feedback coming from you. People who buy Teslas generally want Teslas. It's not so much of a, it's not like, oh, well, they go to the dealership and they have to kind of, crunch numbers. No, they just go in and just go buy it. Um, so it's a select niche factor demographic. And I think they did a report last year or maybe the year before last that people who buy Teslas also own Apple products. So they generally like gadgets. So it's the same demographic. It's the guy who has the iPad, who owns the Apple Watch, and as well as the iPhone. They always have the latest version of the same tech. So that's their demographic. There's a report. I should have posted it, but there's a report that Tesla just moved the last of their Model 3s and Model S's to Budget. I think that's the company, the rental company.
Mm.
So whatever last ones were left over on the lot, they sold it to Budget.
Wow.
Because the tax incentive ran out.
Right. And I mean, I'm pretty sure there was some sort of deal in place just for that, right? Where Budget was like, yeah, well, when those tax incentives when they expire, why don't we just have like a prearranged deal on the books to get them? Because no one's
Well,
gonna in California anyway. No one's forking over money for Teslas without that EV tax credit.
well, you have to also take into consideration that who has the lots for that, right? Who has a lot space for those Teslas? That would be the rental companies, your fleet companies, right? So now,
Yeah.
although your consumers are not going to get the tax rebate, um, Tesla is selling those vehicles at wholesale prices, so they're not paying the same price, right? That the regular consumer is going to pay. That they're actually moving those at discount to get them off the
Right.
lots because they had to. They had no choice, right? We read an article before on Hangout with Lionel that Elon Musk was looking for. He had went out and got some kind of trucking company, um, and they didn't have enough drivers, enough CDL drivers, right? And we had talked about black men getting their CDL so they can actually fulfill these roles. Um, and there you go. They couldn't move the vehicles
Mm-hmm.
time, so they could, So that it's a supply chain effect that's affecting all of this for Tesla, but not for GM, not for Toyota. I'm surprised to see Toyota is low in sales. Um, it's just one of those things. I think Kia and Hyundai is probably eating up their sales big time with that Kia Soul and those
And
Hyundai.
Iconic, I think that's what it's called. That EV car that they have. They're
Well,
talking about,
just about half of their vehicles are EV now, or
right.
almost
They
hybrid.
have that, and that iconic model that they have. I think the new model that they're going to roll out for this year is like the range is supposed to be something insane, like 300 miles or something. So for the cost, they're saying that for the cost of the car, it'll be the best deal on the market based on like range, and features. And I think it's going to be around that Nissan Leaf price point, around 28 grand or something like that. But yeah, I see Hyundai definitely, and Kia definitely like taking a bite out of the traditional automotive manufacturers market share.
Yeah, they were moving 50,000 vehicles a month on the Kia Soul, which is with their best-selling car. So
Yeah,
that's very close to what the Toyota Camry does, what the the Corolla does. Um,
50K a month.
yeah, they were moving at one point. They were moving 50,000 souls a month. That was a very hot. That's it. That's what saved the company.
Well, I was gonna say, I mean, cause shit, I mean, all the other manufacturers, they wish they were getting those kind of numbers.
The only other vehicle that was selling like that was the Camry, right? The Honda, even Honda's Accord doesn't sell like that.
Yeah,
Even though it's a reliable car, it's just not.
it's
It
gotten
wasn't
extremely
that.
ugly, but we'll save that for another discussion.
Well, the market got cramped, right? I don't. Now I can go out and go buy a Hyundai Sonata. I can go out and get a
Hmm.
Kia Optima, right? I have choice now in that demographic.
Yeah, Honda doesn't own that demographic like they used to. Like the Accord was like the go-to. It was the Accord or the Camry.
Right.
It was one of the two, and then pretty much it
Yeah,
was
you
like,
even bought this.
hmm?
No, I say you even bought either one.
Yeah. I was gonna say, yeah, it was either one basically. Yeah.
Hmm. Hmm. And,
If you bought a Ford Taurus, you were just anti-Japanese car.
even the Taurus, I think they had canceled that, right? It's that's not I mean
Yeah, they
that's not
killed the Taurus.
that's not
They
a
killed that.
person's primary choice. That's not
Yeah,
a primary
they
choice.
they killed the Taurus, the Focus. I'm surprised they killed the Fiesta. That was a nice little car right there, especially if you got the turbo version or like the RS version, man. Like that little Fiesta was a little hot hatch. But yeah, they killed all of those and the Fusion. I think it was all four of them.
I'm just trying to see if I can find the article real quick.
Paul Bryant says Audi R8 V10 for half off.
I don't
Where are
think.
you finding that, Paul?
No, he's just saying from a discount perspective.
Oh,
The R8s are discounted, but they're not discounted that much.
God, I would say that V10. Like, really, dude? Half? Shit.
There's
Let
been
me.
rumors that they were going to move to a V8, but that's not going to happen.
Yeah, because that's my whip right there, Paul. That R8, man. That V10. Jeez.
if I can find it.
What is it that you're looking up right now, Mike?
No, I was just looking up the article, but it's open mic right now. We can just talk about anything, and we can go back and talk
Oh,
about Amazon. Um,
I was gonna ask you, man, what was the I had just gotten in when you guys were talking about medical cannabis, and you guys were asking if I was on. I just got into the chat.
oh, Lionel, do you remember what we were talking about? I think Lionel's asleep. Let me see if I can pull it up.
Okay.
Oh, we were talking about the legalization aspect through social equity programs and how it affects black and brown men, right? So,
Mm.
um, what it was supposed to do in the first place.
Yeah. I mean that one was kind of a mixed bag, right? Because the equity programs are there, but they're they don't necessarily guarantee you like a spot at the table per se, right? Because when you look at it, industry wide, there's a whole lot of tables, right? And there's like
Mhm.
people eating at different tables and stuff. So what the equity programs were largely designed to do was to allow for entry into the industry, right? To lower the barriers, to prevent it from being something to where it's like you're only gonna play ball if you got money. It was to remove that. I think the challenges right now that are being had right now are you don't have enough people involved in the industry to kind of leverage the equity programs, right? Because you leverage the equity program, and then all of a sudden, all you're going to do is just basically partner with somebody who is going to have a majority stakeholder in whatever venture you try to get off the ground, right? Because what's already pre-existing are uh, business networks, supply chain networks, and all that type of stuff, where you would be coming in as more of like sort of like a customer type of thing, right? So you're not really seeing the true benefits of the industry from being a part of like a foundational or infrastructure position. So the equity programs they're good, they're good, but there has to be more, and that more has to be more people and more individuals getting involved in the industry and serving different roles and different purposes, and then starting to create that infrastructure between them, creating that infrastructure. So now we start to have a supply chain that directly benefits the people who have entered through the equity programs or not. I mean, it's really just a matter of like having that infrastructure in place where the costs and profits are shared across the board. Again, when the way that the equity programs are typically set up, you're gonna you're gonna apply for a license for a business that you've created, and then next thing you know, you're gonna be partnering with some pre-existing, farmhouses, companies, and all that kind of stuff. And again, your margins are going to be minimal. I mean, your profits are going to be minimal. You have large margins. You're not going to really get the benefit.
Okay.
Yeah, that's I mean, as far as the challenges, man, that's basically what the challenges are. There aren't a lot of black owned uh, grow operations, or cooperative cultivation operations. You know, there's a lot of things that could be in place that would make the leveraging the equity status more favorable to us. But you know, we gotta get to that point. So.
Yeah, I think that a grow co-op is actually what's needed in urban areas, using shipping containers and stuff like
Mm-hmm.
that under highways, stacking them up, not in everybody's face, where people complain and shit like that.
Mm-hmm.
Definitely something to look forward to, creating a social equity part two program or something like
Mm-hmm.
that, as a follow up.
Yep. What about like you know, those large buildings that are kind of like in blighted communities, right? That can be
Yes.
you know, they can be retrofitted indoors for indoor cultivation, right? And you know, that could either be for like cannabis, that could be for even for places that are in food deserts, you know, and you're doing indoor microgreens and food production and stuff like that. So, but for the purposes of this discussion, you have indoor growing facilities, literally like, you know, in areas that are accessible, you know, to quote unquote minority communities. So the stuff is there. It's kind of like around us. You have to, yeah, there has to be a thought applied to repurposing it for a specific purpose.
Right.
Yeah. And I would also
Right. I
even
don't have
say
any.
too, man, with that, just one last thing with regards to that. You know, we've spoken a lot about it, man, just all throughout 2018, and, you know, the last bit of 2017. But there's the fintech, cryptocurrency, there's that whole commodity based side of the hemp and cannabis game. That's a whole other industry segment. That's a whole other part to this that, again, outside of, you know, the brain trust kind of, you know, touching on a lot of this stuff and doing the analysis on it, there's not much talk in it. And again, I think we might be looking at a situation where if we don't take a critical view or a critical look at it, it may be another key area where we'll lose out because we didn't explore the opportunities there.
Right. Right. And I think that I don't know if you were on earlier, but we discussed Africa,
Mm-hmm.
in the tech industry, tech startup industry, and they're cracking $1 billion in 2018.
Wow. It's definitely
It
popping there, man. Yeah.
Yeah, yeah, and the thing is, like, as we discussed in the beginning of the hangout, that if you go through the main streets of YouTube and Black YouTube, you don't hear anybody having that conversation. Um,
Mm-mm.
it's crazy to think that the cannabis industry is, $8 billion industry in California, and $6 billion industry in, in Washington or in Oregon, that Northwest corridor. Canada's, legalization of it. $20 billion industry there. You would think that this would be a conversation amongst these areas, and I don't see it happening.
You know, man, what's disheartening is that before this became like a legit um what's now becoming a global market, right? We've crescendoed over into an actual legitimate global market. It's no longer like contraband or, you know, drugs sold on the black market. Screw that. That's not what it is anymore. When it was that though, it seemed as though we had much more interest in it, seemingly, right? When it became a global market, I don't know, we kind of got cold feet about it. You know, there was a lot of apprehension about pursuing the industry and stuff. And I'm like, well, why is there apprehension in pursuing it when it's legal versus when the shit was illegal? We was making rap albums about, like, you know, trafficking the shit.
Because the startup capital is less.
Uh,
I mean, that's it. I mean, but it's you. But we would rather, it's the part that doesn't. We'll risk our lives. We'll take a penitentiary chance when we don't have money. I mean, that's everybody knows my point of view. The people with the money needs to be the ones taking the chances, but the people with the money have secure jobs, and so we got to change that because when something becomes legal, you're competing with more people who have money, and then you got politics about who's going to get this particular uh, real estate location to sell the store, or, to set up the store. It's more competitive. It's professional. It's real business, and the people who were selling on the corner, they don't have real business acumen. So this is a different game where
but
you had to be willing to go to prison. You just had to be willing to go to prison. You're willing to risk going to prison. That was the requirement. You needed courage more than or I don't even really. In a sense, it's courage. But it wasn't smart. I'm not trying. It wasn't a smart move, but that's what was required, and a drug distributor would give someone, loan them the product in order to take that penitentiary chance. But in professional, competitive business circles, you don't get that.
I mean, you don't, but I mean, again, as somebody who's, and I'm gonna put this disclaimer out there. I had the credentials. I have the credentials to do so. So, as somebody who's grown his own weed, it doesn't take much, right? It doesn't take much. And I'm kind of I'm lampooning this a little bit. I am sort of going off of largely a lot of the the manufactured artificial hip hop narrative of the rapper slash drug dealer, right? And how he's rolling around, in the bins and in the rolls or whatever, stacks of cash, all this and all that. When I know that what it took me to build out my little grow room in my closet was maybe like about $500-600, right? I've seen more money thrown around in rap videos at strip clubs than the money that it takes to actually build a little grow room, right? That could net you shit anywhere from maybe 8 ounces to maybe a pound in about 3 months.
Yeah,
And
but
then you do the math on it, right? How much that goes for wholesale, and then you start to see where look, it doesn't take a genius to put this together.
yeah,
Even looking at it from a legal standpoint, the numbers are still the same.
yeah, but the people, that were that we saw with the rap labels riding around in the videos with the Benzes. Unfortunately, a lot of those guys did get into the rap business from doing just what you said. so they've already done it. So, but with what we're talking about
You're
now,
going backwards.
yeah. So now will they re-enter the drug game legally? Will they do it now? But it's going to be harder now because let's say you were the kid with your grow room. Now they're going to be competing with corporations with grow rooms.
Yeah.
So it's a different game. So it's going to be people with more money, more knowledge, and maybe more discipline and more hustle in that in a legal sense, legally monitored structured sense. They're going to have more hustle. So that it's more competitive now. So I think it's going to have to be a different caliber of us getting that business. It's going to have to be the people with the business, with the management skill, the business skill.
Yeah.
So
I mean, and I'll tell you this, like, just my observations, like what's going on here in California. So you've had, what I can say is, for 2018, when legalization took place, basically what happened was that a bunch of small businesses that were created at the onset of medical legalization here in California got railroaded. So yeah, big boys came in, deep pockets, The regulations changed so that basically you had to spend a lot of money to get your business um, permitted and licensed for recreational sales, right? And a lot of the businesses that were in operation prior to the passage of that bill, they didn't have capital to do all that. These were like small businesses, dude. These are people who just, they made their money, paid their rents, you know, paid their bills, bought their food and all that. And that was the way that they sustained it. They weren't, a lot of people weren't pocketing big chunks of money like that. They really weren't. So now that you have a lot of big time growers, they got, you know, 8 ounce of weed, but in this real snazzy glass packaging and all that. And then you go ask them, well, how much for the eighth? And they're like, oh, this is $50. You're like, $50? Like, what the fuck? Are you serious? You know? So what's happening is that you have two things going on here. You have the deep pocketed players came in wanting to put their high end, quote unquote, high end product on the market and all that stuff. And the people kind of thumb their nose at it, like, what the dude, like, I don't give a damn what you call it and what kind of label you put on it. It's an indica and it's $50, dude. I ain't paying that shit. When they know there's some cat around the corner who's growing it in his backyard and he's got that goody and he's gonna shoot it to you for like 25, 30 at 8. So things are kind of moving back to that too. And then you also have people that are just saying, you know what, man, I'm just gonna grow my own. For all this, man, this was stupid. I shouldn't have voted for this.
Another weird thing in the DMV, a lot of people have even before it became legal recreationally, a lot of people had the medical clearance, to buy, and you either had it or knew somebody that had it. It wasn't hard to get it, but I know someone that told me, they mentioned me one day, they're going to, get some from their weed man. I'm like, why are you dealing with the weed man? You can, get it, from the pharmacy or whatever. And I've heard this from more than 2 or 3 people. They said the daggone pharmaceutical stuff is too damn strong. They're going to the weed man. They said because the government, they said the government stuff is too strong and they don't really intend to get that high. So I mean, there's also a little movement afoot to want some label and some strength labels on it from the government because it's too good. People I had people tell me, look, man, I got to go to work in the morning.
I was gonna say that's just the nature. That's the nature of just most popular strains today. I mean, they've all been kind of crossed and blended to where potency levels have kind of crescendoed upwards, right? So yeah, your garden variety sort of like stress weed, you really don't find that, especially like in California. You ain't gonna find that too much nowadays. You really ain't. Like you're like you can get some Kush for like $15 an eighth, and that's like base level stuff. And then you go and get like some high powered stuff. Yeah, that's some knock, put you on your ass type stuff. But yeah, the stuff that you're getting at dispensaries nowadays, especially for like older folks who maybe smoke weed, like the last time they smoked was maybe like sometime in the 80s or something. Yeah, they're quickly finding that the weed that exists nowadays is way more potent. I think let's see, Abdul was saying something in the chat. Says, why doesn't Dr. Dre have a weed shop? He had an entire album called The Chronic. Also, well, Snoop has a lot of money tied up in weed for like people who don't know.
Those guys have a lot of blind trust and stuff like that keeps their name away from.
Yeah. No, Snoop is heavily invested in weed. Like, yeah, he trusts me. Snoop getting money in weed. Dre's got like, Dre don't need to have money in weed, man. What Beats by Dre. Like I forgot how much that dude has pocketed from Beats. He doesn't need to do that.
Yeah, but if you Snoop Dogg or I mean, he could put his name on his brand would sell.
Mm-hmm.
And I mean, can you imagine like Cheech and Chong. You know,
You
that's
may
like a
not want to.
brand.
He's got, I mean,
May
Snoop.
not want to.
Well, he's got a line of stuff. It's not, I don't, it's not like called like Snoop something or whatever. It's not. It's nothing like named after him. It's just it's something that he's invested in. There's like two. He's got like 2 or 3 different ventures that he's invested in that are cannabis related. But it's not like, his face on the product or anything like that. It's just there's like so for example, another, I don't know if you guys remember that rapper Exhibit.
Yeah.
Uh, okay, so he's invested in a couple companies that have actually that are pretty big in Los Angeles. One is like it's an edible candy called Laffy Taffy, or like yeah, Laffy Taffy or something like that. And then, but the other one is a vape product called Brass Knuckles, and so that's like a real popular uh like vape cartridge. Like it's pre-filled with like they make the vape juice from different popular strains, and the brand is called Brass Knuckles. And I know he's a part of that group that brought that onto the market maybe like 4 years ago. So he was in it at kind of at the onset of like the whole vape thing, and yeah, it kind of came up.
So you answered your own question. They did step up their game in some cases.
No. I mean, well, like some of the LA cats, of course. I'm just talking largely because there isn't, there's not an expansive like. This was one of the objectives that we were looking to try and do. This was like our early push from 2000 from seven late 2017 onward, was to establish like a network of hemp and cannabis, my quote unquote minority owned hemp and cannabis companies that were networked, so that as a like a collective or a co-op, we have access to different products and services within the industry. I mean, these are the type of things that we have to have in order to get access to these types of things. It's like, again, just sort of like on our own, it's a little difficult. But when you look at just hemp and cannabis consumption amongst Black folks, look, that's a market segment that could largely support itself.
Yeah, but a part of the answer to your initial question is the legalization is not really it's been late in coming to the places where we are. That's one. Maybe that's not a coincidence.
No, it's not.
Okay,
It's
so
not.
that would affect us getting into it. So if the cities where we live are last to legalize, then structurally we would have been handicapped right there.
Well, it starts with the states. It's going to start with the states first. The states, when they talk about recreational legalization, that's when there's going to be talk about equity programs that are going to come along with that. There has to be, because of the fact that minority folks were largely policed for the drugs that are now being legalized and going to be bought and sold over the counter. So they had to put something on the table with regards to an equity program. I don't think that but see, I'm not a believer that those equity programs are going to just be the end all be all. They really aren't. It's the foot in the door, right? But then once that foot's in the door, you got to start bringing people in. So the person who has the foot in the door, who gets through into the equity program, should actually be backed by like a conglomerate or a co-op of other interests in the industry, right? So it's kind of like you're almost sending like a Trojan horse in, um, and that's kind of how I've always viewed it. So because I'm just saying, like, Black folks consume a lot of like hemp and cannabis products. We consume an awful lot, so it's not as if the market potential isn't there. It's most certainly there, right? But again, we come back to Black folks doing Black business with Black folks. And if they are actually down to do something like that, if they're actually down to support a Black owned cannabis industry, or is it going to be a lot of like, robbing and stealing and dumb shit that typically goes on with Negroes and weed? What's it going to be? Are we going to take a mature approach to this? Because if we do, there's a lot of money to be made.
Yep.
All right. If there's nothing else, then I think we'll shut it down for tonight.
Yeah,
Go
that was
Cowboys.
just to touch on the American campus
Go
part.
Cowboys.
Oh no, here we go. Who you guys go? You guys got who you guys play?
We play the Los Angeles Rams.
Oh, you like the Rams. I don't follow NFL too much, man. I follow college, but okay, the Rams.
Blah 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 blah. I want to hear about football.
They're gonna be the Lambs.
I want to hear about football.
No, I can't. I
Oh
can't.
man,
I can't talk.
Lionel on yeah.
I can't talk no trash. The Los Angeles Rams are a very good team, and y'all really should be backing your team. You know, y'all really
I'm pretty
should.
sure people out here are, man. I don't know.
They say about 60% of the ticket sales are going to Cowboys supporters. You know, Cowboys have practice and their summer practice summer camp is in what has been in Oxnard and Thousand Oaks.
Yep.
For the most part since 1963. So there's like generational support.
Yeah, my older brother's probably one of the biggest fans here, but whatever.
All right. Thank you all for joining us. We will be back tomorrow night with episode 125, Black IT Talk, IoT, Internet of Things, decentralized applications, as well as smart contracts.
Nice.
Have a good night.